So very good afternoon everyone. So before we start with the session, first let me introduce myself. So, hey. So thank you very much. Listen. Hello, hello. 1 second. Hey. So thank you very much. Hey. So I am CA Koushik Mukesh. I am a chartered accountant in practice. Hi. So before we start with the session, will you stop? First time I came on time. Listen. From today, every day, FM on dot it will start because I have my reasons, because the entire syllabus should be completed in the given time frame. So, yes, because like law, this subject will not be there. This is times more complicated than that. So, because of for that reason, we need to understand each and every point clearly in detail, which takes a lot of time. And moreover, subject itself will be new for you. So, even before we start, first thing, the name of the subject we are going to start is Financial Management, paper number 8, CA Intermediate. I think you know where you are. Thank you. So, CA Inter, the last paper, paper number 8, will have two parts, A and B. A will be the financial management, B will be economics for finance. Marks apportionment will be 60 and 40, technically it will be 70 and 46, including choice. So, FM will be coming for 70 marks in examination. If you can attempt better in practical paper like FM, you can take choice in economics for finance. Did you get my point? And moreover, the safety with this, no problem, you can. Thank you, no problem. So, what happened? What happened? Before the class you will die. BP. You will get BP unnecessarily. See here. So the point is, when it comes to financial management, there will be two parts in paper number 8. A will be financial management and B will be economics for finance. Financial management is a part which I am going to take. This will be coming for 60 without choice and 70 with choice. Sometimes 74 marks also came. So patternless, minimum 70 marks. Maximum it can also rose up to 74 sometimes. But I can't give that guarantee. But 70 damn sure will come in exam. So it's a 70 marks paper, financial management with choice. If you can avail the choice in that area, you can give the choice for the economics for finance. That's the best way you can do. And when it comes to financial management, is there any link with the subject like law? If that is a question, first my answer is yes, yes and yes. Reasons are, law there will be no financial management. But to understand law, financial management is required. Reasons are very clear. There are so many concepts in CA Interlaw, like buyback of shares. Buyback of share concept, if you take in law, dealt by section number 68. Buyback financial analysis we will do in FM. If you understand financial management properly, why provisions are drafted like that, you can understand very easily. Hope you are clear to the point. Because at the end of the day, law will be drafted by the standing committee. The standing committee will be formed by two people, industry experts and legal experts. Legal experts are those who are having versatile experience in writing the law. Industry experts are those who have versatile experience in running the companies. So practicality will be learned by industry experts. Law making skill will be there with the legal experts. Both blend put together, law will be made. Hope you can understand what I said. Industry experts will give the financial inputs. For example, buyback concept is there. Lawmaker want to write a section on buyback. How can he write? With what input information? Financial experts like who will do analysis on financial management. They will tell these are all the financial impacts if you go for a buyback. Share price will stand stagnated. EPS will fall. Like that they will give some information to them. Whenever companies go for buyback, EPS will reduce, MPS will fall. Like that they will tell. Listening, I purchased a share worth 1,000. You went for a buyback. Share price came to 900. Just because of buyback, my share price has fallen or not? Answer. Yes, then lawmaker will take necessary measures in the law. Okay, since your price is coming down, ask shareholders by passing a special resolution. Did you understand? So the financial impact, if you understand properly, why sections are made, you can understand very easily. Especially CA Interlaw chapters like share capital and prospectus, general meetings and certain other chapters, which are heavily linked with financial management. So point number 1, about this subject, let's leave about that. Financial management as a subject will be having totally 8 chapters. I will give you the details of each and every chapter, books that we are going to prepare, from where we will write the notes, everything I will show you the clear indication. But before even going into that, it's my responsibility to tell you what about the syllabus. Syllabus will be divided into 8 chapters, 4 and 4. Study material 9 will be there, forget about it. I'm not talking about that. Technically, how many chapters are there? If that be the case, 8 chapters will be there overall. Clear? Okay? Sir, I will show you what are the chapters. Don't write anything. This is only for your understanding sake. See here. See here, the subject financial management will be having 2 parts. For the classroom purposes, we will divide this into 3 parts. First one, financial analysis. Second one, investment analysis. Third one, dividend analysis, also called as income analysis. Listen, why financial management is very important at CA Inter. Reason number 1. Here FM forms part of 60 or 70 marks respectively. Clear? At CA final, it will take another form called as SFM, Strategic Financial Management. Horrible syllabus will be there. You believe me. Okay. Horror, literal horror, SFM. Because here what you see will be 20-30% same in final. 100% syllabus at inter will become 20% syllabus at final. If you learn here 30-40%, then you can skip attempt directly. So therefore, how good you are in basics, that good you will be in final SFM, because capital budgeting starts here, ends there. Cost of capital starts here, ends there. Capital structure starts here, ends here. Problem will not be there. Okay. Next, dividends starts here, ends there. Like that, out of 8 chapters, 6 chapters start here and end there. Understood, everyone? Like law, like tax. How they start here, end there. How tax start here and end there. FM also start here and end there. So beginning is worst. Ending will be too worst. Take for granted. Worst memory in your life will be financial management. So if you don't understand the basics properly at CA Inter, interest will not come. If you don't listen here, their interest will not come. I'm talking about final SFM. So always whenever I take CA final SFM, I will always get 2 types of students who already underwent CA Inter coaching of FM and then came to final SFM. They are very comfortable in the discussions that are made. New people will join. For them, exam is for us. First, we need to conduct examination for ourselves. Now, what I need to teach them? Basics again I have to teach. What do you mean by time value of money? What do you mean by cost of capital? Again, start from the beginning. That problem will not be there if you have a connected inter continued at final. Before going into that, I will give you another 1 point. See here. Inter FM will be coming for 60, including choice come for 70. Final it will be called as SFM. 100% practical paper with 100 marks of paper on financial management. This will be paper 2 at CA final. This is paper 8 at CA Inter. I mean 8A. Here A, B is not there. Directly only one paper will be there. Full 100 marks financial management will be there, or extraordinary core items will be there on par with the international courses. Examination standard, question standard will be above the mark what we generally estimate. Good questions will be there. Nice analysis will be given. That's about the CA final SFM, and this is a CA Inter FM. Clear, everyone? Next, number 2. When it comes to the preparation, or when it comes to the classes first, what we are going to start with? Questions may arise. We are first going to start with a chapter called as cost of capital. What is the concept? Cost of capital. This is chapter number 1. There is a 0 chapter. Means it is not in syllabus, but without that we can't start syllabus. Time value of money. What is the concept? Time value of money. Everyone listening? Yes, sir. First chapter will be the cost of capital. Chapter number 2, we are going to start with dividends. What is the next one? Dividends. These two, how much interlinked these two are, you can understand once you do the problems in this regard. Clear? Cost of capital and dividends put together will come for 10 marks to 14 marks. This is a weightage of the first 2 chapters. What are the first 2? Cost of capital, dividend. Everything I will make you to write in notes. Okay? 5 minutes give me. I will first introduce you to the subject. After that, I will show you what we are going to do in the next coming sessions. Okay? See the screen first. Number 3. The third chapter, which we are going to start. Most important in entire FM. Capital budgeting. In one of the attempts, this came for 31 marks. So paper wherever they open, capital budgeting. People who didn't prepare and left it and went to exam. So paper question paper they will take. Okay, they will take. In one of the Mr. Bean show, he will take calculus paper instead of trigonometry. Like that question paper is. People has a bad Very bad habit will be there with the students called as a leaving chapters. Sometimes Sida they will leave capital budgeting, gone out of window. Some attempts are there where capital budgeting alone came for 31 marks. Any question they touch capital budgeting. Any question they touch capital budgeting. Therefore, in our class, capital budgeting alone will take around 35 hours. That's the highest amount of time taking chapter, because lot of analysis, 100 pages notes you have to write in class. You won't believe? Give me 1 minute time. I will show you. What you need to write also I will show you, including number of pages. Then you will realize the facts. See there. Capital budgeting. Capital budgeting is not one chapter. Capital budgeting is a world in itself. It's like Avengers Endgame type. Okay. So in the entire syllabus, the most important chapter in our syllabus is capital budget. No doubt in that, with no stretch of imagination, anyone will tell capital budgeting is the most important chapter in the entire CA syllabus. I'm not talking interview final, including final I'm telling. Final will have another analysis called as risk analysis in capital budgeting. What it is? It is there in CA Inter, not there in CA Inter. It is there in CA Inter. But basics they kept here, torture in the final. Here first degree, there second degree and third degree torture. Okay, basics they kept here. Remaining concepts you will see in CA final. So therefore, when I say capital budgeting plus risk analysis put together, generally you can expect 12 marks to 15 marks in exam. Last attempt 8 plus 4, 12 marks came. Last attempt, immediate last attempt, one 8 marks question, one 4 marks question. Theory I didn't see, maybe 1 2 marks question might come. Average, any attempt you take, how many marks? Means if you do 2 chapters, how many marks are there? Capital budgeting alone will come for that many marks. Means if you leave these 3, you can leave the attempt day. You can happily enroll for the next exam. Are you understanding or not? Or you didn't prepare these well, go to exam hall, take question paper. No, acknowledge that this is not your paper. Give to them. Okay, give to them. Go to invigilator. So tell, come out of exam hall, ask them when the next exam applications will be given. Come out and write again. So that's the danger of leaving these chapters. 3 chapters on hit list. Who are the hit list chapters? Very, very important. Capital budgeting and risk analysis. These 3 are 4 chapters in your book. Because risk analysis is one chapter, capital budgeting is another chapter in the study material. Clear? But we are not going to do that way. We are going to merge everything, capital budgeting and risk analysis. Everything we will do together. 4 chapters technically. In our class, those will be merged into 3 chapters. First, we will complete these 3. If it is 60 marks paper, in that 60, technically if you take 12 and 12, almost 25 marks out of the 60 will be completed with the first 3 chapters. Say, listening everyone? Yes, listening? Yes, for this, 70 hours will be taken. The core of FM, 70 hours. I have asked for 130. 70 will be covered with this. First 4 chapters as per the study material and module. Next, after that, next starts a chapter number 4 for us, 5 in the study mat. Capital structure theories. What is the name? Capital structure theories. This will be coming for 6 marks in exam. Next, after that, listening sir everyone? Yes, sir. Next, once after completion of capital structure, financial statement analysis. Everyone tell me? Financial statement analysis. This will be 8 marks to 12 marks chapter once again. What it is? This chapter is also called as ratios analysis. What is this? Account started? Started. In that there is a chapter called a single entry system. Know that it is there in syllabus? Very good. Sorry, it may not be single entry in the book. In book it will be written as accounts from incomplete records. If you don't even know the syllabus of accounts, Om Namah Shivaya. Forget about everything. Okay. So you must know what is the syllabus. Accounts from incomplete records, also called as a single entry system. This chapter will be 50 to 60% similar to that of it. Very easy chapter once you understand the core basics clearly. So this is the fifth one. Financial statements analysis. Next. Sixth one. Leverages. What is the name of the chapter? Leverages. This will come for 5 marks to 8 marks in exam. Last one. Working capital management. Which one? Working capital management. 10 marks chapter again. Okay. This is how they will in general gives the question paper and the pattern. Okay. From this the moral of the story. Syllabus is limited. Limited in the sense there are no intruding boundaries where questions can come outside the syllabus. That concept will not be there. FM itself, whether in inter final, they don't give out of syllabus questions, etc. Boundary will be there for your syllabus. Limited number of chapters. Final SFM 14 chapters. Inter FM 8 chapters. 8 chapters. We divided that into 7. So 8 here, 14 there. Syllabus will not be, seems to be very huge. Voluminous syllabus will not be there. But voluminous data will be there. Means you have to remember the things. Clear everyone? There are 2 ways of doing FM. Way number 1. Doing as a question answer formula. This is way number 1. Which I never follow. If that has to be done, I will stop teaching FM. Happily I will go for alternative. So, first point is any formula, anything written on the notes should have some logic. Say for example, a plus b whole square will have a equation. Why that came is our intention in class. It is not a square plus b square plus 2ab that everyone know. But why is a question here. Dy by dx, there will be some meaning. Dy by dx equal to 2x I said. Why? What is the meaning of that? That we are going to learn here. Sir, why dy by dx will come, sir? Now I said 2 things. One is a plus b whole square, next one dy by dx, derivations. Both will be there in FM. FM includes maths totally. Again, FM maths will be seen in a different way. Formulas, analysis. So, mathematics will come in a different form. Maths as mathematics will not come, but math will come in a different form here. It takes a separate view. So listen. Statistics. Did you remember the concept called as a mean? Yes, very good. Variance? Yes, very good. Deviation? Yes, very good. Standard deviation? Yes, very good. Correlation? Yes, very good. Covariance? Overaction. Wait. One second. CA foundation stats like covariance, correlation, all these things are there or not? Yes, everything will come again. Sir, which chapter, sir? Tell the name of the chapter. At that time I will not come to the class. Capital budgeting. Sir, I will not believe you, sir. Just for fun sake you are telling. Sir, I will show that fun in ICA website. Hello. See here, some students will again make a false allegation on me. Sir, you opened In foundation statistics, so see here, intermediate. In intermediate, which one? Here? Shall I click here? Ding, 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 jang, jang, dang. First part enna probabilities first chapter, variance second, standard deviation third, coefficient of variation fourth. Hey, one second, see here, please see there once. Sir, if you listen, I can tell something. Please see here. See here now. एक बार देखो, बार बार देखो, हजार बार देखो. देखो क्या है बोर्ड पे? Importance of variance, standard deviation in capital budgeting. Point number 1. Capital budgeting is important or unimportant? In capital budgeting to be important, if you want to get 15 marks out of 15 marks in capital budgeting, you need to do half capital budgeting or full. In that full, what is there? Along with this, so many mathematics techniques will come. Not in capital budgeting. Which chapter it will come, sir? I will leave for that chapter at least. First chapter, cost of capital. So therefore, you have no choice of leaving the class. So first point, you have to do the answers. I think you might have seen this symbol also somewhere. Somewhere you might have seen. Sir, past is past. Somehow I passed. So don't again go back to past. I forgot everything. So you have no choice. We have to understand fun part, but you have to understand so many capital budgeting techniques. We will be using statistics, math will come again. So don't think that I am saying from some joke sake or what, but it is very serious. We have to prepare. We have to understand what do you mean by variance, covariance, correlation, standard deviation, everything again you have to understand, not in theoretical sense. It has to be understood in a practical way. What really is the difference between variance and covariance? Variance means root of sigma, I mean standard deviation, root of sigma x minus x bar whole square by n. Yes or no? Yes, sir. When you do covariance, sigma x minus x bar into y minus y bar divided by n. Probability not given. If probabilities are given, sigma p into x minus x bar into y minus y bar. Like that they will write. From the faces of so many students, I understood you didn't prepare anything. As if for the first time in life you are listening, you are putting faces. So it is my imperative duty to tell you that we have to understand why we will multiply x minus x bar into y minus y bar. Why? Why I should not add and divide by n? Why they multiply? Why root will come when you calculate standard deviation? Why we have to square x minus x bar whole square? What is x bar? X bar, not just bar. Thank you very much. Listen. So why x minus x bar? Why it is deviation? Why? Answer. So like that, so many questions will be still unanswered at foundation. We are going to fill all the gaps. So understanding the real meaning of a formula, there will be around 45 formula will be there in your full FM. Finally, there will be around 110, 112 will be there. You have to not just remember the formula, you should understand the meanings behind. Why they came, what is the meaning of this formula. If in class I write any formula, you have every liberty to ask what is the meaning. I will not generally give you any chance to point out that any of the formula was unexplained. If at all I forget to explain any kind of formula, you can happily ask in the class. What I want to convey with ultimate confidence is any 50 of the formula will be there. Any formula if you take, I will tell you the meaning, logic, interpretation, derivation, how that formula has come. Clear everyone? Yes, every formula, when I say every formula, not selected formula, every single formula whatever we write will have a logic behind, because they don't write formula illogically, because unless and until with a hypothesis you prove, math department will not accept your formula. So there should be some logic behind everything that we need to understand. So you can see the chapters from the study mat. First one is a theory, leave off. Second one also theory. Those two I will give as a theoretical notes. From third chapter onwards it starts. What is the first one? Financial analysis, also called as what? Ratio analysis. Next one, cost of capital. Next one, capital structure. Next one, leverage. Stop there. This is only tables. PV factor tables will be there. Those tables, leave off. That is not a syllabus, appendix. Next one, again seventh. What is that? Next, risk analysis in capital. Seventh one in our notes, it is called as capital budgeting. That investment decisions, another name is called as capital budgeting. The king of entire FM. Capital budgeting. Next one, ninth one. Last one will be management of working capital. That's all. 10 chapters in study mat. One financial tables is not a chapter, is only PV factors. Leave out. 2 theory chapters if you leave. Totally how many are there? 7. That's what the 7 I have written. Clear everyone? In our class, every 3 chapters I will give you the schedule. First we are going to start with 3. Already I said you. Number 1, cost of capital. Number 2, dividends. Number 3 will be, that's all. First let us understand these 3 chapters. Once these 3 chapters are understood, next 2 chapters schedule also I will give after that. Clear? So first we are going to start with 3. Cost of capital, dividends. But today's class, first we have to complete one small area which you already have touched in maths in CA foundation, called as a time value of money. You might have already done. But you are going to see it in a different angle altogether. How financial management, this concept of time value of money will play a crucial role. Let us try to understand that in detail. Before that, understand the subject of finance. Finance is a world in itself. Maybe at CA interlevel you are not that much mature to understand how the financial markets will run, but you have to, example for sake I will tell you, finance is such an area which is having the career itself. When I say career is there, it is a subject which is having its own recognition as a certification. Examples I will tell you. If you complete CA, after that there are some courses like CFA. Clear? Chartered Financial Analyst. CFA. Globally recognized career opportunity. That will be having only finance inside it. Nothing more than finance, nothing lesser than finance. Out and out syllabus la finance only will be there. Clear everyone? If you want to see yourself as a stockbrokers, like Rakesh Jhunjhunwala, Warren Buffett, these kind of people. Okay, if you want to do analysis on stock markets, the only certification available in the entire world, 2 certifications are there. Number 1, either you have to become a CFA graduate, certified license holder of CFA. Second, CMA US. What is the next one? CMA US. These certificate courses you can do without CA. Sir, I need to qualify CA to do these 2. No. Graduation completed, you can enroll for any of these 2 courses. Worldwide recognition, globally recognized. Companies like PwC, Deloitte, KPMG, EY, Grant Thornton, Goldman Sachs, Invesco, Franklin Templeton, Capgemini, All these kinds of big multinational companies will hire the financial analysts. So who will have versatile knowledge in financial management? For that, this is your first steps. The first steps of financial management. Because in life you might not have seen financial management any time before. Because no way, there is no chance. Because the word finance will come and translate to money. In school, you need not learn about money. In colleges also same. In foundation, they don't make you to learn. It becomes more complicated. So therefore, finance starts at enter, ends with death. I'm not telling financial management subject. Without finance, who will live? There are two things which are omnipresent. Number one, God. Number two, money. Okay, anyone who touches with expertise on any of these two will reach heights. Number one, God. Okay, I didn't see, you didn't see. Second one, money. Everyone has seen, but we don't have any clarity about how to manage it. So this syllabus is talking about managing money. How to manage the money. In my pocket 100 rupees is there, how to multiply it? Not by taking others' pocket 100 rupees. I can understand. Some people almost, they're about to tell that answer by taking 100 from another person. How to multiply your 100? What are the modes of multiplication? How stock markets actually works? They are the things that we are going to learn. Clear? And next one, very important. Time and again I have been telling you the same. This subject as a financial management you can learn in two ways. Number one, mugging a formula without having a conceptual clarity. Just writing formula, answer, formula, answer, formula, answer. 60 hours we can complete FM. 60 hours we can complete FM. Did you understand what I said, everyone? Fast track batch for FMA, I am taking around 100 hours, means you can imagine. So it will not be completed so easily. You have to understand every concept clearly. So for that, it requires that additional effort to be put in the class. For that, one thing is very much required. I will at least twice in a week, I will bring you a particular newspaper called as a business line. Did you understand what I said? Business line. Financial management subject, if you want to create interest, the first and foremost thing is you should know how the markets actually works. Stock market I am talking about. You should know how stock market works. When stock market will open, when stock market will close, some basics we should know or not. All those things. I will take care about that in class. And every day candlesticks, trading charts will be there. Sir, how to understand that? A question will arise always. Whenever time permits, I will analyze the trading charts. Okay, I will show you the website also, which website you need to see to understand trading charts patterns. You can zoom it for around 5-6 times in that particular website. It will take you to the lowest level of detail. How the price is moving every second it will show. Clear? Website name is a Trading View. I will show you on the screen in another 2-3 days. Once we come to cost of capital, I can show you. Trading View. Their charts will be available. Charts means trading charts. Every day trading will be happening. Na? Trading charts will be given clearly. How really impacting the trading charts are. How to understand. Basic terminology. Clear? When our classes are conducted during daytime, I can show you how to buy a share. Trading hours closes at 4 o'clock. I mean 3:40 it will close. So every single day it is not possible. Saturday, Sunday, holiday for stock market. I think you know this basic. Saturday, Sunday stock market do not work. Monday to Friday. Derivatives market na Thursday ne close. Settlement will be done on Thursdays. So how to buy a share, how to sell a share, how to give lot sizes. What do you mean by aftermarket orders? What do you mean by stop loss? So many doubts people will get when they open a demat account. I will open a demat account. I will show you how my demat account is working. If you buy a share, what will happen? If you sell a share, what will happen? Background work of stock exchange, what it will do. Everything let us analyze very clearly. When the time permits, I will definitely 100% I will show you that. how to analyze the trading charts, meanings of certain words used in stock markets, everything. From the basics, we will learn each and every point whenever it is required and time is permitting us. Clear everyone? Next issue, newspaper. One should have a habit of reading the newspaper. Actually, I don't read newspaper physically. I have iPad, therefore I use it to read Academic Line also every time. Only in Academic Times or Business Line. These are the two financial magazines released in India every day. Daily newspaper, one is Economic Times, second one will be Business Line. If you could not buy, no problem. If you have mobile phone, na? Instead of opening all those, open this. I mean ICI website, like that. So, go to the particular portal and open that. You will have a great analysis. Everyday market movements, which share rise, which share fall, analysis, editorials, everything will be available. For that, the first requirement is, sir, how to read newspaper is a question one. Reading newspaper itself is a problem, because I'm not joking, really. So many of you sitting here will not even know where to start the newspaper. Sir, no. Where to start? From the first page? First page is only to attract you. Therefore, nothing will be there in page 1. So, where to go in a newspaper? Sports page. I know. Last page or sports page I am not talking about. Middle page if you take, there will be a concept called as editorial. Every single day, take any newspaper in India, need not be financial magazines, any newspaper, middle page either before or after, editorials will be written, which is generally unbiased. They will write editorials. Financial editorials, now fantastic way they will write. Last day, if any company has had a steep downfall, what happened in that company internally, everything they will give. If a company makes a profit, how the stock market reacted to the profits made, everything they will analyze in that. You need not buy anything. I will show you on the screen. Don't buy newspapers unnecessarily, you will not read them. Eventually, those number will grow. So therefore, you need not. But I will make you to learn how to read it. Clear everyone? You start like this now. Down the line another 5-6 years, you will become expert in trading. You will understand. Then you will show some enthusiasm to do the foreign courses. Like CMA, US, CFA. Who will do all these? Who have a understanding about finance at CA level. They will now understand the importance. Okay, I can have a good clarity on inter-FM, fineless FM. Why can't I do international course? Clear? Hopefully you can understand what I said. Very much demanding courses in the world. CPA, CMA, CFA. These are the 3 most curated courses throughout the globe now. Internationally accredited and having their validation. Throughout the globe they are having validation now, including India. Why? Finance has become a global topic today. It is not just India or USA, etc. Hope you are clear point, everyone. So, with that intent, we are going to start our syllabus. The first chapter we are going to start is time value of money. Without that, don't start financial management. Even before that, point number 1. This particular financial management will form part of section A in paper number 8. Everyone in the class, I mean to say everyone means exactly everyone. Don't come to the class without study material. Clear everyone? Why? Reason I will tell you. Financial management completely put together, institute study material contain above 300 problems. Did you get my point, everyone? More than enough for the examinations. Clear everyone? Directly questions will come with a change in numbers. Don't buy any book. Any book is inferior to institute study material. Did you get my point? So I am writing the sources of preparation. From where? Number 1, ICA study material for problem solving only, not for concept. Bad concept discussion. Worst, to be very frank. Second, the USP of our classes, USP, unique selling proportion of our class is class notes. You write this, you will see the impact after writing. Okay? Once anyone see your notes, how many people will take Xerox, you will know. Believe my words. Believe my words today. Note the time date. 2:58 April 3rd. Okay? Afternoon 2:58. Exactly after 10 days. Please remind me on 13th of April. Okay? 14th holiday, na? That's why. 13th of April, again by 3 o'clock in afternoon. You will see the change in yourself, how we are going to approach towards the financial management. Okay? So please listen carefully. Class notes is the most important thing. Good reasons are there. Number one, class notes will contain full theory, problems taken from ICA study material. ICA study material will have three kinds of problems: examples, illustrations, practical questions. First one, examples. Second, illustrations. Third one, practical questions. These two we will cover in a fast track, exam oriented, whatever you call. Everything we have to cover in a regular batch. Did you get my point or not? Examples and illustrations will give you 70 to 90% of the clarity. Conceptual clarity 100%. Any problem you can do. But practical questions, if you do, any of the concept, whatever you learned previously, 2-3 concepts are there, they will merge into one question given practical questions. Nothing new you are going to learn in practical, but the only thing is how an answer should be given when consolidated questions come. Did you understand? I will give you a classic example. Capital budgeting, there is a concept, please. Capital budgeting, there is a concept called as NPV. Second concept, IRR. Third one, payback. Fourth one, accounting rate of return. 4 topics are there. Illustrations, 4 topics independently we will discuss. Thank you, sir. 4 topics independently we will discuss in illustrations. Clear? Practical questions, what they will do is in the same question they will ask all the 4. Did you get my point or not? Therefore, nothing great here, but the most important thing is illustrations. Very, very important. Core for your syllabus. The illustrations what institute will give. Did you get my point, everyone? I repeat once again. Listen. Sources of preparation. Number 1 is a study material. Complete study material we are going to cover. Second one will be class notes. This is a USP in itself. So just to show you how it will be, not just one chapter, I will show you the 3rd chapter we are going to start with. What is the topic name? Please see the screen once. I am making it full screen. Just to make you understand what we are going to do in the class, please see the screen once. Every chapter will have a learning objectives. Introduction to capital budgeting. Like this. Each and every question will be analyzed. Please. So any question here, if you see there, what is written? I1 means what? Illustration 1. Study material, what illustration number it is, I will give there. Illustration 1. Means all these answers are given as per ISM. Answers exactly will tally. Model, best model we will do. Clear? Institute sometimes uses some rogue models no one can understand. I don't know why they do like that. I will show you also when it comes. But still, better ways of doing the answers are there. Like this, we are going to present everything. Now question. Sir, what I need to do with this? You have to write everything. Oh, oh. Everything. Sir, for example, this is given. Sir, I need to write everything. Everything. Okay? Each and every point given here, you have to read. Nothing, not even a single page I will share. Okay? You have to write in the class. Okay? So the moral of the story is maintain a 200 pages, if not 300 pages, ruled notes. Some people are thinking, sir, beginning accounts, sir, ending with auditing I started, sir, middle tax is there, somewhere in the middle costing is there. Now where to write FM? Maintain a separate book. I am telling you very clearly, later you will feel very bad. Why I have written in this mixed book? Listen, please maintain a separate book for FM. Minimum 250 pages notes you have to write. It takes time, but still that clarity will remain forever in life. So therefore, please try to understand. This is a subject which is a foundation here. Clear? So finally it will show a lot of impact. So please write down the notes properly. Did you understand, everyone? Yes, and I am telling you very seriously, FM completely different from law when the pattern of teaching comes. To be very frank, if I have to tell, I love FM than law. So you have seen me in law, right, everyone? Yes, you can take it is a times better than law. So I literally, this is my all-time favorite subject, financial management at Inter, SFM at CA final. These two subjects are so lively subjects. One at FM and another is SFM. So please listen carefully. Each and every concept you need to understand the logics. It is not just like a question or answer. Clear, everyone? So time value of money we are going to start with. Everyone have these separate notes for FM? Yes, everyone? Yes, next. At least have 5 colored pens. If, sir, I don't have, sir, after the break go and buy. You want sponsorship program? Okay, thank you, I will. And again, listen, every 3 to 4 days, in every 3 days, remember all these things, every 3 to 4 days, in the class, we will have a talent hunt, which I like the most when I teach CA Final FM also, SFM. What I used to do is, we will complete some portion of syllabus. One worst case problem I will give. I am telling about problem, not a person. Who is Kishore? Yarade? Who is that? Nia? Why you are so popular? No, they made you popular. So, listen, when it comes to a concept that is completed, I will give you one worst case scenario problem. Say example, we started with cost of capital. First we start with cost of capital. Sir, we will complete it. To some extent we will complete or not? 3 or 4 days after, I will give you one question on the screen. That question you can't find anywhere in study material because that's a final question. Okay. I will give you one question. Relevant to our syllabus, but question gave in CA final. Those type of questions I will give you. Clear or not, everyone? Answer. Yes, anyone in the class, if they do that answer correctly with regard to that particular topic, okay, either direct cash price or I will give you one of the best books available in the market with regard to any subject for you. Not ISM. ISM is I can print out and give. No, not ISM. Best books I know. Okay. So the best books available in the market. Are you understanding? This is only for one good reason. You should understand the pleasure of learning the financial management. Financial management, don't see it as a subject for 70 marks, final a subject for 100 marks. It's a life, it's a career in itself. So many, thousands of people, if not wrong, are living on this subject called as financial management. Stock markets, investment banking, so many areas people are going into that. So therefore, keeping that futuristic visionary point in view, let us understand the financial management in its truest sense. Like not just reading and answering. Let's not do like that. Clear, everyone? So let us start with our first chapter in financial management. Okay, na? So let's begin. Write the notes. Keep the heading. So we are going to start with our first chapter. Chapter 1, time value of money. Though this chapter is not separately covered in your syllabus, without understanding this, you can't even take one step forward in financial management as a subject. So therefore, please take reasonable care in understanding this. Don't think that I am just joking. Seriously, I am telling you, time value of money, if you understand, you can understand capital budgeting properly. Capital budgeting la 40% is a time value of money will get repeated in a different way. If you understand here, you can understand capital budgeting properly. Not to create interest on this chapter, I am not making this statement, or else I would have told you cost of capital, it is relevant. Capital budgeting chapter is very much interlinked with the chapter called as time value of money. If you understand this properly, you can understand the capital budgeting chapter with more clarity, or else again I have to repeat all those there. Clear? So now listen carefully to the point. The name of the chapter is time value of money. Question first arises, what do you mean by time value of money? There are, shall I continue? Yes, there are two things. Technically 3 words. Off lever, time, value, money. 3 words are there. One is a time. Another one is a value. Another one is a money. Financial management subject will do only one work. Valuation. What it will do? Valuation. In foundation, I gave you one example to you. Same example I will repeat once again to make you understand the importance of this. There are 2 words. Price value. Everyone? Price. Everyone? Price. Second one? Value. Example I can tell you. Water bottle 300 ml. Maybe 250 grams weight may be there for this, including the bottle. 250 grams, including the bottle. Maybe 250 grams may be there. Okay, a 300 ml bottle, maybe 250 grams. 250 grams weight I am talking about. Later, okay, 300 ml weight, 250 grams. 250 grams gold biscuit is there. Listening? Which of the 2 will have more value? 250 grams gold, which will be having more price here? 250 grams gold, 250 grams weight of water? Gold. Answer? Gold. Obviously gold. Clear, everyone? Now answer my question. I kept you in a room where I will not supply you with water for around 6 to 7 days. I said, you want water or you want 250 grams of gold? Answer, yeah? Now tell me, which is having more value? That's the difference between price and value relationship. Are you understanding the point or not? Understanding the value of something is the need for financial management. Market prices are there. I don't want those bloody prices. I want its worth, value. Are you understanding? You go to Dubai, UAE, Qatar, Lebanon, Muscat, any place. Ask them, do you want gold or water reserves? If you plow inside the land, you will get water. If you plow inside the land, you will get gold. Which they will prefer? So therefore, what is the logic that you have to understand here? Water has more value, gold has more price. Are you understanding the point or not? In FM, for the products also, we will calculate the value. Listen again, I will repeat. Share will have price in the market. We call it market price. Answer. Price in the market is called as what price? Price in the market is called as what price? Market price. Market price is the price quoted in the market. It's called as a market price. A share is trading in the market at 100 rupee. Is it really worth 100? Huh? You told you? No, some people said. Who told you? It may be higher, it may be lower. I repeat once again. A share is trading in the market at a price of really it may be worth 100, it may be worth more than 100, it may be worth less than 100. 100 is? But the real value, worth, can be either less than that, equal to that, more than that. I want to value these three in FM. So FM concentrates on valuation, pricing. So pricing is taken by costing. Costing looks after pricing. FM looks after valuing. Now understood the relation between those two or not? Who will fix price? Water bottle price. Who will fix? Cost department will fix. How much is the cost of this cap? What is the cost of this cutting pot? What is the cost of molding this? What is the cost of buying this plastic? What is the cost of filling? Per unit basis, they will calculate raw material, work in progress, finished goods, overheads, prime cost, cost of production, cost of goods sold, cost of sales, target profit, like that they will calculate on this. That is all which department? There we talk about pricing and costing. FM is talking about? Therefore, time price of money, time value of money. That's how the name value came. Are you understanding the point or not? So we are not going to discuss about pricing. We are going to discuss about valuation. That's why costing chapters are cost sheet, material cost, labor cost, overhead cost, joint and byproduct cost, process cost, batch cost, contract cost, operating cost, operational cost, sunk cost, fixed cost, variable cost, semi-variable cost. These are all pricings. Are you understanding or not? Those many will not be there here. Only one thing. What is that? Value. Value, value and value. FM entirely. CA final SFM syllabus, I will read, just listen. First chapter, securities valuation. Second chapter, portfolios valuation. Third chapter, mutual funds valuation. Fourth one, corporate valuation. Fifth one, bonds valuation. Sixth one, companies valuation in mergers acquisition. Seventh one, options valuation. Eighth, futures valuation. Ninth, other derivatives valuation. Tenth, next one is forex valuation. 11th, IFM, International Financial Management. Here most of the times what you heard? Value, value, value. Entire FMA valuation. Sir, I don't believe you. Go to ICA website. Instead of going and stopping at enter, click final. You see what is there. All valuation models. Here, what is valuation chapter, sir? Can you please explain me? Where valuation is involved in my subject in CA Inter. First chapter, a cost of capital valuation. You will value the cost of equity, cost of debt. Valuation you will do there. Second chapter, dividends valuation. Third, Yeah, capital valuation is not there. There you will do asset valuation. What valuation? Asala chapter totally value everywhere. I hate values, but values like me. So wherever you see value, everywhere value, nothing will be there. So let us try to understand clearly this particular chapter called as a time value of money. First point, everyone understood the point clearly or not? Yes, sir. Answer. Yes, sir. Please keep the heading in the notes. Time value of money. Time value of money. Each and every point let us understand clearly in detail. Lot of discussion will be there, but still first let me start with the basics. Shall we continue? See here. See here. I will write some formulae. First tell me, do you know them or not? I am not asking logic etc. I will explain. I am just asking you, do you ever seen them? First time in life, or at least you know, you are acquainted with those formulae at foundation. PV equal to FV divided by 1 plus R whole power N. Have you ever gone through this formula? No, thank you. FV equal to PV into 1 plus R whole power N. Yes or no? This is nothing but reciprocation here. Nothing great I have written. If you have seen this, and if a person said I didn't see this, which museum is available? Immediately after this place we have to look after. Our second formula is nothing but refurbished model of the first formula. Have you ever gone these two formula or not? Yes, everyone? Yes, these two are base formula for SFM or FM entirely. Using these two formula only, everything will get repeated in some or the other way. Small differences may come, but the logic will be always sustained. PV equal to FV divided by 1 plus R whole power N. FV equal to PV into 1 plus R whole power N. Logic we need to understand, not the formula. This is what I told. Foundation level, what is required? To know this formula, put the numbers in this formula, answer will come. That's all enough. But inter it should not happen. Why PV? What is this? What is this R? Meaning of this N? How to understand this future value? Why we are dividing? All these things if you understand, fulfillment will be there for the formula. Everyone understood the point? That's what we are going to do. Did you understand what we are going to do in the class? We are not going to do Harikatha here. We are going to understand the meanings behind the formula. Why you write something. Clear? So before even going into that, keep the heading time value of money. First one. Need for the chapter. Everyone, one small request to everyone, maintain only ruled books. Don't maintain white pages. In exam, ruled book only will be given. At that time, if you want to be comfortable in writing, write in the ruled book in the class. And second very important thing, how many of you don't have calculators? Why you target him here? Everything Kishore. Sir, answer. How many of you have calculators with you? Everyone. No borrowing. Thank you. Great people. Take calculators out. What you are doing, Puja? Take calculators out. Work starts from the very beginning. Sir, FM is not theory subject. Everywhere number say will be there. So please. First one. Please. Topic number 1. Need for the chapter, time value of money. Need for the chapter, time value of money. And moreover, another thing, please listen. I spend hours and hours, days together to write the notes, because first I started with CA Final SFM, completed writing, 963 pages hand notes I have completed. After that I started with this, FM. So I started it with a intention that I should complete each and every point in the study material in a way times better than the study material. Problems I will do from ISM only, but analysis should not be ISM analysis, it should be times better than it. So with that intent I have written the notes very clearly. So please listen, I spent so many number of hours, sleepless nights, though many people tried to disturb me. Okay, I used to write the notes. Many people tried to disturb me every single day, but still I try to write the answers. So only for one good reason, because I am determined enough I should complete this. So therefore, how many chapters are there totally? Are there 8 chapters? 7 chapters notes completed. 1 chapter pending. Working capital I am doing now. Working capital also 4 subtopics are there. 1 subtopic already over. Another 3 subtopics are there. By the time we come to first 10 days classes, it will be completed. Okay. First point, we are going to understand what is the need for the chapter? Time value of money. Let us understand the meaning. There are 3 words: money, value, and time. I didn't bring my bag. Anyone can give me 200 rupee notes or 500 rupee notes. If 2000 also I will take, but will not return back. Then you will understand value. My bag is not. Thank you. I received. 500 I received. One multi-billionaire came. Bro, this is unexpected. 500, 500. Name? Rishi Khanna. Shout for him from today. Happy? Listen. Hey, see here. See here now. Hey. Over action you can win. So listen, my point is, if possible, is it visible? This is a 500 rupee note, you can believe. Okay na? How much? 500. Tell me, what is this? Another 500. Please answer my question clearly. We have 2 500 notes with us. I will ask you a question, just basically answer this. Nothing financial management required. Everyone has a God-gifted common sense. Using that you answer. Don't prove that you don't have. Using basic common sense. Okay? Tell me. In these 2 500 notes, which 500 note is more valuable? First 500 more value, this 500 less value. Is there any such concept? No, answer. No, tell me, left hand 1 500, right hand 1 500. Which 500 will have more value? Both are having same value. I go to a shop, give this 500. I bought something. Okay, in that shop, if I give this 500 also, same thing he will give. Or if I give this 500 note, he gave me 500 notes. For this he don't give 6. For this he don't give 4. Same 500 notes will come. Now tell me, both are having same value or different value? Same value. Answer? Same value. Very good. Now let me change this. Okay, see here. Now tell me, 1 500 note is forwarded, 1 500 note is a backwarded 500 note. Means, I said you, this 500 I will give you today, This 500 I will give you after 1 year. Did you understand? Yes, I kept 2 500 notes before you. Okay? I said, 1 500 note I will give you today. 1 500 note I will give you after 1 year. Choose which 500 you want. Use common sense, God gifted, I said. Okay? One more time I am repeating for those who are not in this world. Come back, I repeat. How many 500 notes I have? 2 500 notes, so which 500 is more valuable? Same value or different value? Next, I said, I will give 1 500 today, 1 500 after 1 year. Which 500 you will prefer? Today 500, future 500? Answer, yeah? Now, today's 500 is in left hand, tomorrow's 500 is in the right hand. Now tell me, which 500 is more valuable for me, for you? Left hand. Yes or no? Previously you said, both are having same value. Now you are saying, 1 500 is having a more value or not? This change comes not because of change in person. Same Koushik Mukesh is holding. This change does not come because of change in 500 note. Same 500 note is there. This change has come because of the change in timing. Therefore, what changed the value here? That's why time value of money is the name of this chapter. Money will change its value not because of person holding it, not because of the currency, because of what? The time that is involved. If you receive both today, both are equal. If you receive one today and one in future, people will prefer today's money only over the tomorrow's money. Clear or not, everyone? Tell me, in the given example, what I said you now, 500's example, today's 500 is more valuable, future 500 is more valuable. Answer, yeah? Is more valuable than futuristic 500, yes or no? This is because of many reasons. Passage of time will lead to so many things. Number one, uncertainty. I said I will give another 500 after 1 year. After 1 year, I may run away. After 1 year, you may not be there. Means not there. Not there means not there in my immediate vicinity to come and pay you. Okay, sir, I may not be there, or you may not be there, or both are there in the same place, but I may become bankrupt. Anything can happen. Future is certain or uncertain? Answer. 1 hour after what will happen, we can't predict. So you are directly telling 1 year after. 1 year after you may be there, may not be there, I may be there, may not be there. Both are there, but I don't have intention to pay after 1 year. Anything can happen. So the problem is, when the time is passing by, uncertainty will increase or decrease? Not answering. Increase or decrease? Now you answer me. Uncertainty is increased means risk is increased or decreased? Start from the beginning once again. Tell me. Same like la, I won't go to the next step unless I get perfect right answer from 100% of the class. So please listen again. 2 500 notes I have shown you. Both are on same date. Same value or different value? Very good. 1 500 will come after 1 year. 1 500 will come today. 1 500 will come after 1 year. Now tell me, which is given a more value? Reason? Future is uncertain. Clear? So, future is uncertain. Future is uncertain means, if I say that I don't want this 500, today I said I will give you 500. Clear? Or else I will give future 500. You will tell, I will take today's 500. Because if I take today's 500, I can use it today itself. If I wait for 1 year, I can use that 500 only after 1 year. Today's 500 is better, future 500 is better. You will choose the today's 500, obviously. Okay, now, why? Because of uncertainty of future. Tell me, when uncertainty is there, risk will be increased or decreased? Increase. When risk is increased, you will ask more return or high return. Sir, BCom and CA, you qualified both. You will ask salary of BCom for salary of CA. Na? Where more risk is involved? Once we join, there is no guarantee that we will complete. First point, risk number 1. Example, yeah, not for you. Don't, every example what I give, don't find your place in that example. That's why you are taking coaching. Okay, listen. Point is, first risk number 1, there is no guarantee of passing through. Number 1. Clear or not, everyone? Number 2, lengthy course of 4.5 years. Number 3, many subjects, lot of analysis. People like me will intermediately come and torture you. These many risks are there in CA na BCom? Answer. You qualified. They said, I will give you 15,000 salary. Happy or unhappy? BCom, only BCom. 3 years, 10 times also he didn't go to college. Degree certificate came on hand. They are telling 15,000. He is happy or unhappy? Happy because risk taken or not taken? Low risk, low return. High risk, risk will come for certainty or uncertainty? I join CA. Certain to pass, uncertain. Therefore, it has a risk in it. Are you understanding or not? Therefore, market pays 10 lakh, 12 lakh, 14 lakh, like that they are starting the payments for chartered accountants means because that much risky course it is. If you complete that risky course, you will become more risky. So therefore, for risky people, they will pay high return. Therefore, they will pay high amounts, 14 lakhs, or 15 lakhs, or 20 lakhs, like that they are going on paying. Summary I want to tell, listen carefully. More risk, less risk, that's all. High risk, low risk, BCom, CA, 500 today, is always having a high premium because future life you promise me a 500 may happen, may not happen. You may not be there, I may not be there. Clear or not, everyone? Or both are there. I may not be capable of paying the amount after 1 year due to various reasons. Future is certain or uncertain? Risky or not risky? Answer. For risk, what you should ask? For risk, high, low, keep off. Risk, you should ask what? Everyone. Everyone. You should ask what? Return. For the risk taken. The return what you ask is called as time value of money. Money has some value. Ask some value from the money. When they tell money is going to come in future, means attach some value. Today's 500, tomorrow's 550. Which will have more value? Both has same value. Did you understand my point or not? I said today I will give you 500. 1 year after I will give you 550. Which you will prefer? Both you can prefer because today I took 500. I kept in a bank, 10% interest. How much I will get after 1 year? Both are same now. Are you understanding the point or not? So time value of money means whenever you are going to take a futuristic money, it should not just equal to today's money, it should pay something more. Clear everyone in the class? Yes, I will give you one question, please answer this. 500 received today, another 500 received today, both are having how much value? Same, okay. How much value? Amount? 500 and 500. Clear everyone in the class? 1 500 I will receive today. 1 500 after 1 500 I will receive today. 1 500 I will receive after 1 year. Clear? Clear? Which will have more value? Today's 500. Future I will receive how much? Future I will receive how much? That means today it will not have 500 value. It will have lesser than 500 value. Reasons we are going to discuss in this chapter. Why is the reason? That answer for that question. Why? Future cash flow will not have Same value like present cash flow is the subject matter of this chapter. Means in this chapter we are going to see the influence of time on money. Whenever time influence falls on money, we should ask some value. That way is the chapter name called as a time value of money. This is how the chapter has come. So summary, everyone understood the concept clearly? Yeah? So many concepts are there. All those concepts I will discuss step by step clearly. But before going into that, there are three words. Number one, time. Number two, value. Number three, money. My question is, last question for you, with regard to the introduction, money influences time, or time influences money? Or vice versa? Money can influence time or not? It cannot. If I pay money, can time go back? Sir, I pay money, can you take me 10 years forward? That means what is influencing what? Time is influencing money. Money is not influencing time. Therefore, everything, whatever we see in financial management, one thing is very, very important. N. Number of months, number of years, number of days will plays a crucial role. Sir, without N, can I do any problem? None of the problems you can do without N. Hope you are understanding. Yes, always financial management talks about time. Every time. Time is not written in T, it will be written in N. Number of months, number of days, number of years. Clear everyone in the class, sir? Yes, understood the point up to here? Yes, sir, first, with no hesitation, please tell me, am I clear up to here of whatever we discussed? Yes, understood everyone? Yes, what is the introduction chapter we started? In financial management, 500 received today. Always remember, today in financial management is called 0. 1 year will be called 1. 2 years will call 2. 0 has a great value in financial management. 0 represents today. 1 means 1 year after. After 1 year, not beginning of first year. When I write 1 in financial management, it means what? First year end. If I write 12, what does it mean? 12th year end. End of 12th year. Clear or not everyone? 0? Today. Don't tell end of today. Overaction it will be. 0 means what? Everyone, 0. 1? After 1 year. 1 year after. 7 means beginning of 7th year, ending of 7th year. This is one very, very important concept you need to remember. Dividends chapter, this will be more useful. Second chapter. Clear everyone? Before we go into the next topic, please listen. Every time, FM syllabus, SFM, FM, finance world, what is the most important number? 0. 0 has a lot of impact. Clear? Because 0 year is called as today. 1 means 1 year end. End of first year. 2 means end of second year. 10 means end of 10th year. Not beginning. Listening or not everyone? Yes, listen now. So this is the first one. How to understand the time. Okay? Next. This is the first one. Second one. Whenever I talk about time value of money, time we understood, money also we understood. Time we understood, money also we understood. In middle, the most complicated word is there. Value. Surrealistically, one example we have taken. 2 500 notes I have taken. Both belong to same time frame today. Which 500 has more value means, with no stretch of imagination, everyone has said, both are having same value. I am asking you everyone. Yes, in another case, I said, One 500 will come today, one 500 will be given after 1 year. Again with no stretch of imagination, you selected the today's 500. Yes or no? That means without knowing FM also, common sense has been given by God through which you can understand the situations. But apply some amount of financial sense. See here now. Time, impact money, no doubt. But how the valuation will be? There are two types of values. From here complication will come, listen. Two types of value. Everyone, how many? Everyone, how many? First one, present value of future money, future value of present money. Time, TVM, time, value of money. Time influencing money or money influencing time? Understood up to there? 500 rupees received today, 500 rupees received after 1 year. Will have same value or different? Which one will you choose? That means timing is what changing your decision making or not. Therefore, one thing we have concluded, time influences money. Now, the value can be of two types. Number one will be present value of future money. Everyone answer present value of future money. Second category is future value of present money. There are two types will be there. Present value of future money, future value of present money. Sir, I didn't understand. I will explain in the most easiest format. Listen carefully. A person can ask you two types of questions. See the screen. I will write the number. You tell me the meaning. Zero na. Unexpected answer. Zero means what? Today. What is this? Don't sit idle in the class. Okay? 3 means what? At the end of? I asked you a question. Or some person, I am asking you. You are a financial advisor for me. I am asking you a question. I asked you. I want 1 lakh today after 3 years. My expected return is? I want a return of how much? 10%. Every year, how much interest I want? Now tell me now, please. I want how much after 3 years? See the screen, participate. I want how much after 3 years? 1 lakh. I want today after 3 years. I need to deposit today 1 lakh, lesser than 1 lakh. Common sense. Everyone? I should deposit 1 lakh, lesser than 1 lakh. Why not 1 lakh? If you deposit 1 lakh at 10%, after interest it will become 1 lakh, more than 1 lakh. This common sense everyone have gather? See the screen now. I want how much after 3 years? How much is my return? How much I want to invest today such that my investment at 10% will give me 1 lakh after 3 years. It is a question type number 1. Listening everyone. Yes, I don't believe you. Answer to my question. How much I want? Today after 3 years. Today I want to invest 1 lakh or less than 1 lakh. Every year for 3 years how much interest will come? Total will become how much? Therefore I need to invest 1 lakh or less than 1 lakh. How much is this? This is called as present value of future money. Everyone understood the logic clearly or not? This is how so many people will ask a question. Sir, really people will ask. Shall I give you one example? LIC. 30 years after you will receive 2 crore. Means today how much should be the premium? Decided using this model only by insurance companies. Are you understanding the point or not? Next. Second question I will ask. Answer this. Meaning. Zero illa. What is this today? Very good. today I will invest how much? At how much percent? After 3 years, how much it should become? This is called as future value of present money. Everyone understood the concept clearly? So tell me, TVM, V means what? Value. Two types of value. Present value, future value. Everyone repeat. Present value, future value. Meaning of this present value, meaning of this future value, analysis, discounting factors, understanding, all these things we are going to see after a break. Clear everyone in the class? First point, everyone tell me, understood all the logics up to here clearly? Yes, take a break and come. We'll start with the remaining analysis. Okay. So 4:15 we will meet again. 4:15. We'll meet again by 4:15. So see here. Now we are going to analyze more deep into the concept of time value of money and understanding various concepts inside this area called as time value of money. So listen. From now it will take a different turn together. Please listen carefully. When I say value, there are two types of values. One is a present value, another one is future value. Don't write anything in the notes. Whatever I discussed till now is already kept in the form of question answers format in the notes. You will write down. This is only rough understanding. Whenever I say value, value will have two types of angles. One is a present value and another one happens to be future value. So see here. Thank you. Thank you. Huh? Huh? Uh-huh. So see here, value can be of two types, either present value or future value. It can be of two types, but the question that should arise in our subject called as financial management, why we need to value, what we need to value. Correct. Sir, everyone first settle down. Never I should come on time. Sir, listen. Value represents, this is the fifth time I said. Value means present value, future value. Something I am telling, someone is interrupting. Bro, over. Thank you very much. Listen. Value can be of two types. Present value, future value. The question is, in financial management, what value we need is a query. What value? Which value? So, the point is value of an asset. Value of asset. From here, the word asset will have a different meaning. I'm not talking about fixed assets, etc. Anything can be there inside. What is a value of the asset? Please listen carefully. This one will get repeated hundreds of times in our syllabus, intern and final. Please repeat this like a Ram Mantram every single day. So whoever you believe you will repeat certain things, you repeat this so many times as possible till you reach the standards of financial management. Value of any asset is present value of future cash flows discounted at required rate. Sir, I didn't understand. Never, no one will understand in one go. First, please read the statement as it is. 1 second. Very bad starting. Start. Value of an asset is present value of future cash flows discounted at a required rate. Is called as what? Value of asset. Question arises. Why should I value? Sorry, you said value, we will value. But why? Question should arise. In entire financial management, you should see everything from the investor angle. I will purchase a share. It becomes what to me? I repeat. You purchased share in a company. Listen. You purchased share in a company. It is a investment, liability. Asset, liability. You, when you are investing on a particular share of a company, you want to know whether the market price is correct price or it is overpriced or underpriced. You want to know. That means now you want to value what? Share. Share for you is a, therefore value of asset you have to value. Company want to purchase a plant and machinery. Want to purchase? Available in the market at 10 lakhs. Really, is it worth 10 lakhs to me? Maybe, may not be. To understand, capital budgeting came. Full chapter capital budgeting, only one point. Valuing the assets, that's all. Which assets? Fixed assets. Which asset? Everyone? So, fixed assets valuation will be done under which chapter? Capital budgeting. Clear, everyone? So, now the question arises. Everyone answer. Value of is the, I repeat, present value of, present value of, as I asked you one question. 1 year after I will receive, 3 years after I will receive 1 lakh. 3 years after, I will receive 1 lakh. Okay? 10% rate I invested. Today, how much I should invest? I ask you a question or not? That is called as what? Present value of future cash flows. Clear, everyone? Logics, everything I will tell you. Read this one more time. Value of any asset is, some people are not reading, I don't know why. Don't make me to point out to you, please read properly. Start. Value of any asset is present value of future cash flows discounted at required rate. Question will arise. Sir, I understood value of asset meaning. I understood what do you mean by present value. Though I don't know how to calculate, you know the meaning. I know what do you mean by future value cash flows. Required rate I didn't understand, sir. Discounting also I didn't understand, sir. What is it? Question will arise. Yes or no? Listen. Present, future. Present, future. Bringing future to present, taking present to future. Bringing future to present. Repeat the statement. Bringing or taking. Bringing the future to present is called as discounting. Is called as? Is called as? Taking present to future is called as compounding. Is called as a compounding. Repeat. First one. Not discounting. What is the full sentence? Bringing the future to present is called as discounting. Taking the present to future. 99% of your syllabus will be dependent on this. Clear, everyone? Clear, everyone? I will ask you one question, answer this. Company want to purchase a plant and machinery. You will buy the plant and machinery today. When you buy the machine today, cash flow will come from that asset to today na in future. Sir, I will take this building on rent. Income will start coming in the past today na or in future. Everyone understood the point clearly? Now please listen carefully. I took this building on lease and I will give it for a sublease. This building belongs to me. I gave it to KS Academy. Say for example, every year they will pay me some rent or not? Now you should only answer, use some common sense. Tell me, this building belongs to me. I gave as a rent to KS Academy. Every year they will pay me rent or not? Say they will pay me 50 lakh rent every year. Now tell me, first 50 lakh I will get today na after 1 year? Answer? Next 50 lakh? After 2 years. Next 50 lakh? After 3 years. Now tell me, today's value, tomorrow's value same or different? That means the 50 lakhs what I receive after 1 year, 50 lakhs what I receive at the end of second year, 50 lakhs I receive at the end of third year will have a same value today na different value? Everyone? I will ask in different way. I will give you 50 lakhs today. I will give you 50 lakhs after 1 year. Which will you prefer? I will give you 50 lakhs after 1 year. I will give you 50 lakhs after 2 years. Which one you prefer? That means as the time passing by, uncertainty will increase or decrease? Riskier, less riskier? Therefore, this concept of bringing the future value to present is called as discounting. This can be understood in this way. Tell me, I have to purchase this building to get a rent on this building. Purchase is made today na in future? Answer? I will give you an example. I said I have $1, £1, €1, ₹1 in my pocket. Example. How much do I have? I ask you a question. You will tell, you have 4 currencies. You will tell you have $1, pound, euro, rupee. Convert everything into one common currency. Listening or not? Yes, $1 equal to 80 rupees. 1 pound equal to 100 rupees. 1 euro equal to 90 rupees. Approximation, everything. 1 rupee will be 1 rupee only. Now, you should tell me, can I add all these? Can I add all these? Yes, can I add all these? Yes, no, you cannot. Can I add these? Yes, now, can I tell I have 180 plus 90, 270, 271. Can I tell I have foreign currencies which are worth 271 rupees? Can I tell like that or not? Yes, now, use common sense. Can I add these? No. Can I add these? Because I converted everything into same concept. You are buying this building today na in future? Today. But cash flows will come? To decide to whether to buy this building or not, you are putting outflow today na in future? Listen again. You have to buy the building, then you will get rent. I didn't buy. Can I get rent? When I get rent? If you buy the building, you will get rent. Means buying is made today na in future. Today if you buy, future rent will come. Clear? So investment is put today na after 1 year. Today. But rent will start coming from? Again I am repeating. Investment is made? Income will start coming from? 1 year after it will come. Say for example like that. Clear everyone? 1 year after I will get the rent. Now answer. Inflows will come today na in future? Outflow will be made? To take a decision, all inflows should be brought into present scenario. That's why discounting concept came. Are you understanding the point or not? How you cannot add dollar, euro, pound and rupee? You can't add 50 lakhs received after 1 year, 50 lakhs received after 2 years you cannot add, because all those are belonging to the same time frame, a different time frame. Now did you understand or not? Now answer this query. Year, cash flow. What do you mean by this? Some people are not listening. Everyone, see the screen. End of 1 lakh year, eh? See the question. First year ending, how much I will get? Second year ending, how much I will get? Third year ending, how much I will get? Tell me. These all are cash inflows. Cash inflows. Rental inflows. You understand like that? Okay. I took the asset for 3 years lease and I gave you to the sublease. Clear? I took it for a lease of 2,50,000. I paid a lease rental of how much? It will be held by me for how many years? I took this building for how many years lease? 3 years. How much lease rent I paid immediately? Inflow na, outflow na? I expect how much rent to come after 1 year? After 2 years? After 3 years? Now tell me, how much is the total inflow I am going to get from this particular building? 1 lakh plus 2 lakh, 3 lakh, 3 lakh plus 1 lakh 50, 4 lakh 50,000. Like this, you should not think. This is not the way you should do. Tell me, 1 second, this is like $1, this is like pound 1, this is like euro 1. Can you add? Cannot. Answer? Now I am having one important question. Can be added? Cannot be added. All of these three belongs to the same time frame, and different time frames. So we need to bring them to a common time frame. There can be two common time frames. Either take all into future or bring everything into present. Take all these two or bring everything to this is present or future. This is not today. One doesn't mean today. One means what? After 1 year. Present means I need to bring back, I need to take forward. Answer. You need to bring back it. Clear or not, everyone? 2 years means I need to bring back once, I need to bring back 2 times. First time if you bring, it becomes what? 1. Again you bring, it becomes 0. Do you understand? Yes, when this is received? So my question, anyone can answer this question, all also can answer. Listen to the query properly. How much I am paying today? Outflow today. Because of putting that outflow, first year I am expected to get, second year, third year, all these 3 are today, in future. But outflow is kept today. Therefore, you can't compare today's outflow with future inflow. Everything you need to bring into today's term. Future to today, we call it discounting, compounding. That's the concept of discounting. Everyone understood the concept clearly or not? So the concept of discounting means bringing the future to present. Listening, everyone? Taking the present to future is called as what? Now, I will ask you one question, answer. Can I do compounding for the same question? Instead of taking everything from future to present, can I take everything present to future? Answer. Wrong, because answers may come, logic is wrong. When you are investing guaranteed today, why you are taking that investment to future? You are not investing after 3 years. When this is coming? Answer. You may tell that, sir, instead of bringing 1 to 0, I can take 1 to 3. I will take this to third year. I will take this to third year. This is already in third year. I can add all the three. You can add, no problem. If you want to add, you should also take this 2,50,000 to 3 years after. 2,50,000 is income, expenditure. Everyone in the class. Inflow na, outflow na? Today na, in future? Today, guaranteed you will put in outflow or not? Then why you are taking it to future? By logic, if you want, answers will come. Are you understanding? Mathematically, you can put numbers, you will get answers. Don't do in exam. Never he will give marks. Reason is, you are investing today. Therefore, outflow is made today. We want to compare the outflows with inflows. Outflow is made. So, I want all the inflows also in which terms? Today's terms. For that, future will be brought to present. That concept is called as discounting. Up to here, clarity, everyone. For discounting, we need to do a formula called as present value we need equal to, tell me, future value divided by plus r whole power n. Question arises. Sir, PV understood, sir. FE also understood, sir. But what is this n? Here, what is the life of this rent? N is 3. Asset expected life is 10. N will become 10. Life of the asset will become the N. Clear or not, everyone? Now the question is R. What is R? Rate of return. That itself is dealt by the first chapter, cost of capital. Did you understand the point? Now I am coming back. Tell me. You should tell, I should write. What is the value of asset? Description. This question I will ask at least 500-600 times in class. With patience, please answer. What is the value of an asset? Present value of future cash flows discounted at required rate. Now I have some questions. Answer this. Do we now understand what is present value? Yes, do you everyone understood what is future value? Yes, do you understand the meaning of discounting? Yes, previously you know PV, FV, FCF. Now you also understood? But what is the last one? Required rate. This is called as factor. What it is called as? Factor. Sorry, I can tell this way. Factor means PV factor they call. Tell me what it is. PV factor. PV factor. PV factor means present value factor. Okay. Now we are going to analyze that much in detail. First lesson. How the PV factors will come. Generally in the question 99 times out of every 100 times he will give the values. Sometimes they may ask a student to value also. Okay. Sir, what is this PV? Present value factor. Also called as a required rate of return. Required rate of return. Before we go into this analysis, first honestly you tell me, understood the value of asset? Yes, understood what is present value? Yes, no sound. Understood what is present value? Yes, concept of future value? Yes, concept of discounting? Yes, concept of compounding? Yes, discounting means what? Bringing the future to present or taking present to future? Compounding? Taking present to? Very good. Generally, in almost all the chapters, we will do what? Discounting. What do you mean discounting? Bringing the future to present. Clear or not, everyone? I will give you another classic simple example you can understand why only discounting will come. You bought a share today. Now you will expect cash flows to come in the past, cash flows to come on the date of buying in future. Today you are Repeat. Today you are buying. Buying what? You need to put some amount or not? Answer. If you put this amount, you will start getting inflows. Today na in future. Therefore, you are now in a confusion whether to invest in this asset or not. Now what you need to do? Compare price with value. Compare price with value. Value means what? Just now you read value. What is the value of asset? Present. I repeat once again. Please listen. This confusion should never come in financial management. That's why I'm repeating so many times. You are buying a share. Market lo one price is there. That is a market price. Price is important or value important? Price already decided by market. 100 rupees. How much? Whether it is really worth 100 or not is a question now. Did you understand or not? Whether it is really worth 100, more than 100, less than 100. That's a decision we are going to take. Listening everyone. Yes, tell me, market law, what is the price? Can you change or cannot change? Maximum what you can do? You can now value the share and you can compare. What is the real value? 101. But it is available only at 100. Buy. What is the real value? 100. How much is in the market? 100. Correctly priced. Value 95. It is available in the market at 100. Avoid buying this share. Clear? Huh? Yes, 3 situations I said. Number 1, 101. Sorry, 105. Second, 100. Third, I repeat once again. First, compared with next, compared with next, compared with. How I got these 3 numbers? I got through this formula. Are you understanding or not? Yes, I valued the asset using different risk rates. Simply, if a person, now I will ask you last question and you start writing the notes. FCF means what? Future is guarantee. Certain or uncertain? Therefore, the cash flows what I am writing here are also certain or uncertain? It is my expectation. It is my expectation. I am expecting next year 30 rupees, after that 25 rupees, like that. He is expecting next year 10, after the 35. Means value of asset will be same for every person, different. It differs from what? It differs from person to person because of expectation of future cash flows. My expectation and others' expectation can match or need not match. Because of how many reasons? 2 reasons. Reason 1, future. Reason 2, the rate you take. Reason 2 is the rate you take. What are these? Only we are going to analyze in the next part of time value of money chapter. Basic understood? Yes, basic understood? Yes, I am going to buy house. Tell me, what is the future cash flow house will give me? What is the future cash flow house will give me? Rent. Commercial building? Rent. Plant and machinery? Rent. Plant and machinery? Sales. Plant and machinery gives me sales. Listening? Yes, but not up to the mark. Tell me, building, employees? Commercial complex? Share? Debentures? Interest? Now did you understand the point or not? These are all what? Inflows given by these assets. Clear everyone in the class? Understood the logic clearly? Write down this. First one. First read, after that you write. This chapter analyzes 3 most important elements which decides the asset value. What is the first one? Cash flow. Second one, life. Third one, PV factor. Also called as a discounting factor. Also called as a required rate or required return. Completed writing. First one only, up to PV factor or discounting factor or required return, up to there. Next, below you write down note. Don't write on your own, please. Up to first 3 branches completed writing. Below write down note. The value of any asset is, the value of any asset is, the value of any asset is, any asset is the present value of, the present value of, the present value of its future cash flows, the present value of its future cash flows discounted at required rate of return, discounted at required rate of return, discounted at required rate of return. Completed. So what is the value of an asset? Present value of future cash flows discounted at required rate of return. Okay. Listen, present value of future cash flows. Now tell me, if I hold a building, what will be my cash flow? Rent. If I hold a share, dividend. If I hold a debenture, so that's the next one. Various types of cash flows and their corresponding PV factors. Listen carefully. New concept in itself. Please see the screen once. See here. Don't write first lesson. I am holding which asset? Real asset means what? Building like that. Okay? Building, land and building like that. That's why example I have taken land and. With no stretch of imagination, you can directly answer. What will be the cash flow given by land and building? Answer. I hold a building. Rent will be fixed by government. Listen again. I hold a building. This building belongs to me. Rent fixed by government. Rent fixed by owner. That means future. Bro, listen. Please. Listen again. This building belongs to me. I am the owner of this building. Or you are the owner of this building. Tell me how much rent this building should give will be decided by external factor, will be decided by owner. That means how much you will get in future. You know or don't know? Because what you fix is what is paid. Therefore, whenever I call real assets, valuation of real assets is very, 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 very easy. Because real assets cash flows are absolute. Absolute means guaranteed and fixed, because the person who is the owner of the asset will decide the cash flows. Therefore, doubtful cash flows are guaranteed. Answer? Guaranteed. Second one. Life. Life, for example, why life is very important? I said you very importantly one word. Very, very important. Time, value of money. Time represents life. Building will have a life or no life? Yes, answer, sir. Yes, sir. Everyone? Yes, sir. I will construct a building. Life or no life? Life. How many years life generally? 10 years. Hey. Minimum building will have 50, 60 years of life. So you construct a building with a basic quality. It will at least directly, without any improvements to be made, 20 years it can run. Maybe 15, 20 years after, outer structures may be having some beats where you need to put some improvement work. Means, once you construct a building, you can maintain that building for minimum 50 to 60 years or not. That means exactly I may not tell 52 years, 3 months, why 5 days, like that I may not tell, but approximately we can tell a life of a asset or not. Yes, tell me now, what is the value of asset? I told you hundreds of times, I will ask this question. What is the value of asset? Present value of future cash flow. Stop. Present value of cash flow na future cash flow na? That's my question. How much future? How much future is my question? That's N. Are you understanding the point or not? So tell me, building life may not be exact, but at least almost absolute value. Can I determine and tell or not? Yeah, 50 or 55 or 60 or something I can tell. Sir, how can you get it? If you ask a civil engineer, he will see the quality of cement and brick you use. He will tell directly how many years it will work. Did you understand? So through scientific methods, we can understand the life of a building or not? Yes. Required rate. Don't ask me what is this WACC, but I will ask you one question answer. Building you can acquire with whose funds? Totally your fund, totally loan fund, combination. Any person in India, whenever he buy the building, he will buy in two ways. Token advance and certain basic money he will give. Remaining he will take loan. Listening everyone? Yes, listening everyone? Yes, that means, tell me, my capital to buy the building is raised from own source, loan source, combination. Answer? Combination. Means 100 rupees is not raised completely by my own. Listen everyone. Yes, some people I am seeing them distracting. Please listen. Basics are not understand means gone. Repetition one more time. Those who are tripped, listen now at least. Okay, listen again. My point is, whenever buildings are there, you need to buy a building to get the cash flow or not. Buying a building can be from two sources of capital. Source one, own. Source two, loan. I can use combination, yes or no? Yes, loan and own will not have same rate of return expectation, obviously. Clear everyone? Now listen carefully. Whenever you are investing, I repeat, whenever you are investing in a building, company can raise money from equity or from debt or from both. Who will give the fund? Equity shareholder can give the fund. Second one, debt holder can give a fund, or combination I can take. Listening. Yes, equity shareholders will give money free of cost with expectation. They are expecting 16% return. Example. Debenture holders also will expect on a bank loan. Bank will ask an interest or not? It is asking 10%. It is asking 10%. Now, everyone, you should only answer me. Tell me. I want to buy. Company want to buy. Company want to buy. Funding will be how many sources? Number one, equity, owner fund. Number two, debt, loan fund. How much shareholders are expecting? How much bank is asking? In every 100, 50 rupees equity, 50 rupees loan I have taken. 1 crore worth building, 50 lakhs equity, 50 lakhs debt. Understood or not? Yes, you should use your common sense and tell now. I will write, you tell. Every 100 rupees, any 100 rupee if you take, in every 100 rupee, how much equity, how much debt? 50% equity, 50% debt. Equity shareholders will give free of cost with a cost. How much? Loan? I am taking 100% loan. Now you should answer. If I take 100% loan, how much is my cost? 10%. If I take 100% from equity, how much will be my cost? 16%. Now I have taken 100% from equity and debt combination. Means 8% here, 5% here, totally how much percent? 13%. This is called as weighted average cost of capital. Understood the point or not? Capital is taken from how many persons? Number one. Number two. You should pay something to equity for the capital taken or not. That's called as a cost of equity. That's called as a cost of equity. Next, you are taking also loan from a bank or not? Bank is a equity or debt? That's called as a cost of debt. Everyone repeat. Cost of debt. Listen again. Equity funding has a cost of free of cost. Cost. What it is called as? Cost of equity. From borrowings also you will take money or not? What we will call it as? Cost of debt. I will ask you two questions. Properly answer. If you answer, I will go to the next step. Or else, repeat. No doubt in that. Tell me, in my example, what is the cost of equity? Languages, no answer. Cost of equity. Cost of debt. I raised it completely by debt. Completely by equity. I used a combination of debt and equity. Therefore, my cost is any one cost, weighted average cost. Therefore, that's called as a weighted average cost of capital. It came to 13% in our example. Clear or not, everyone? Now, use common sense and tell the second one. Basics you should be ultimately strong. See here. Real asset discussion over. Very, very important. Our subject is completely on financial asset. Tell me. Building is a? Plant is a? Share is a? Financial asset. Bond is a? Financial asset. Now, did you understand the point, everyone? Okay. Now, financial assets are two types. First one will be financial assets are two types. First one will be debt. Second one will be equity. First, let us see the debt. Shall I continue? Valuing the debt is very, very easy because of three reasons. Do you know what are the three reasons? Certainty, certainty, certainty. Why, sir? Tell me now. You are taking a loan from a bank. Number of years is fixed, not fixed. Use your common sense in life. When you go to a bank and ask, I want loan, bank said how many years? Some number. Some number of years, you will tell her. Term fixed, not fixed. Fixed, not fixed. Payment of interest every year of a fixed percent is also fixed, not fixed. That means in case of debt, three things are fixed. First one is life. Life is certain, uncertain. Answer. How much you have to pay? The cash flow, certain, uncertain. 100% certain you have to pay. Life certain, uncertain. Bank will ask a percentage of interest or not? Required return of the banks, certain, uncertain? Certain. In case of debt, all the three elements which gives the value of asset are certain, uncertain. Sum up everything. Tell me, what is the value of an asset? Stop there. First one. Of discounted debt. I will tell the asset, you tell three components. Building, present value of, what is the future cash flow? Discounted at what rate? Required rate of a building will be, if you finance by equity, cost of equity. If you finance by debt, cost of debt. If you finance by both, weighted average cost of capital. Generally both they will use. That's why I kept there. Clear, everyone? Second one. Which asset we are considering next? Debt. Financial asset. In that which asset? Debt. Debt is easy, difficult? Very easy instrument is debt. Reason, Debt lo three things are certain. Number one, cash flow is certain because cash flow is dependent on rate of interest. 10% loan, 1 lakh rupee. First year, how much interest? Not listening, listen again. 1 lakh principal, interest 10%. First year, how much you should pay? Second year. Read again. First year. 1 lakh rupee have taken loan. Okay? 10% rate of interest. First year, how much I will pay? Second year, 10,000. Third year, fixed or not fixed? Answer. Certain or uncertain? Very good. I have taken how many years loan? This will be increased. All this will be decreased. Time is fixed or not fixed? That means here two things are happening. First two, cash flow is 100% certain. Life is 100% certain. Rate of interest is fixed or not fixed? Fixed. That's why debt. You read this now. What is the first one? Cash flow. Absolute or not absolute? Name of cash flow is interest. Fantastic. Next, life. Because in the deed itself they will clearly write the term. Okay. Third one. What is this? Required rate is called as a cost of debt. We are reading equity or debt. When I am reading debt, cost will be cost of debt. Sir, what is this cost of debt? All these things. This is all we are going to read in our first chapter. Cost of capital. Name lone it is clear. Cost of debt capital. Cost of equity capital. Cost of both the combined capitals is the cost of capital chapter. Understood or not? In this you should not have clarity only in one aspect. What is that one aspect? Required rate. I only said cost of equity, cost of debt, but real meaning I didn't tell. Reason? In the first chapter we are going to learn all those things. Clear everyone? What is the value of asset? Whatever you value, you will get some value or not? You will compare it with what? You will compare it with what? Start at the beginning. You will value or not? Value will come. You will compare this value with what? Prices. Price versus value is FM. Clear? Price versus value is FM. Price already determined, not yet. Already determined. What is not yet? That you need to do. Value for me, value for you will be same or different. I charge first year rent of 2 lakh, second year 2 lakh, third year 2 lakh. You charge 3 lakh, 2 lakh, 1 lakh 50. Both of us will have a same value or different value. Because what is different? Cash flows are different here. I am expecting 50 years life, you are expecting 60 years life. Both will get same value or different value. Fantastic. I raised only by equity. 16% is my cost. Listening. You raised by combination. 13% is your cost. Value for you, value for me will be same or different. That means you should understand one point. Value will change from person to person, but price will not change from person to person. Are you understanding or not? Yes, I am starting from Westmambalam here, Aryagouda Road. I want to go to T Nagar. I stopped an auto. In my mind I will have one price. I should not pay more than 100 rupees. Clear? I stopped an auto. Auto stop. I asked him, I want to go to T Nagar. How much? In my mind, how much is there? I fixed it for 100. That's the value for me. From Aryagouda Road to T Nagar, it should not be more than 100. I stopped him. I asked how much. He said 70. First I will jump. Because I am expecting to pay how much? But he is asking me to pay only how much? Jump into auto, shut your mouth, language irrelevant. Let him take to any place he wants. First jump. Second, he said 150. Namaste. Please leave. I will see another auto. Why you are not just going into the auto in the second case? You are giving the value of distance from Aregoda Road to T Nagar only 100. When the pricing is really done at 150, you are not willing to buy. Clear or not, everyone? Mind la 100. You stopped. He came. He's a mind reader. He stopped. He said, how much I asked? He said 100. Immediately I went. Now listen carefully. Here, your value is changing, price is changing. Value. Clear? Some other person, this fellow, our millionaire is there. He thought that I can pay minimum 200. Minimum 200 from Aregoda Road to T Nagar. 200 I can throw. He thought like that. He stopped auto. Okay. He asked, how much? He said, 70. Jump. Second, he asked, how much? 150. Jump. Third, how much he asked? 300, he said. Now he will also tell that, I am fixed only for 200. I will not pay 300. Now the price and value comparison is changing again. Are you understanding the point or not? So always same logic applies also on financial assets. That's a financial management as a subject. Means always you will do. But in case of auto, that much calculation not required. Generally we will have one intention in mind, 100, 120, 130 like that. But that 100, 120, 130 should have a scientific proof in case of FM. How you got that 120? How you got that 100? How you got that 30? How you got that 40? We should tell with workings. Therefore this became complicated. Did you first understand what I said? Everyone in the class? One time tell our signature statement. Value of any asset is present value of future cash flows discounted at required rate of return. Every person will have same price or different price. Same price, same value or different value. As a finance manager, I am going to value assets or price the assets. Value of an asset is determined by three factors. Number one, life. Number two, cash flow. Number three, discounting factor. One, life. Number two, number three, last one is discounting factor is also called as a cost of capital. That's the first chapter we are going to start with. Understood the entire logic clearly? This is the point, sir. Please write down this. Sorry, I forgot to tell about equity. I'm very sorry. 2 minutes, complete it and then write down. Please see there. Equity, the most complicated asset in this world. Equity. Reasons I will tell you. Reasons I will tell you. Reasons I will tell you. Now tell me, house has approximated life or not? Babu Chitti, house has an approximate life or not? Debt has a guaranteed life or not? Equity means equity share. Yes or no? What are the features of company under Companies Act? First one, artificial legal person. Yes or no? Second one, perpetual succession. Yes or no? Means company will continue forever. Means company continue means share will also continue. So life of a share is perpetual. Means known, unknown. That's the first problem. Life unknown. What unknown? Don't copy my statements. You tell directly the word. What is uncertain? Life uncertain. First point. For what? Share. Because share will continue till winding up of company. When company will wound up, we don't know. That means life not known. First point. Second, listen. What is the cash flow on share? Answer. Dividend is a guaranteed amount, optional. May come, rate also may be followed, may not be followed. Last year 2 rupees, next year 3, next year 6 bumper, next year 0. Anything can happen. Guaranteed or unguaranteed? So risky or not risky? Very good. Therefore, when everything is risky, return will be more higher, lesser. More risk. Therefore, the shareholders will expect lesser return, more return. That's called as a KE calculation. What is calculation? KE will be seen in your first chapter, cost of capital. Are you understanding or not, everyone? With these many uncertainties you value. In CA Inter, they have given only one formula. CA final, one chapter A is there for valuing KE only. Name of the chapter is Portfolio Theories and Asset Pricing Models. Enna? Please, everyone repeat. What is that? And asset pricing models. So, there is a separate chapter called as Portfolio Theories and Asset Pricing Models. Other name is Portfolio Management. They can call in 2 ways. This is the chapter. Maybe you can see or not, I don't know. I will. Here you can see 107 pages notes. One single chapter you may not see here. Down below it is there. 107 pages. Only one single chapter. What is the chapter? Portfolio theories. Sorry. For a proof sake, I will show you one point. This much we have done. Lastly, we calculated KE. This is one of the finest chapters. Just it will come for 20 marks in exam. CA final. You should ask CA final students about this chapter. You tell the name of this chapter. Automatically, first right hand will move. Next left hand. So, how many concepts are? Hell, a lot many formulas. So many concepts will be there. Only to value one thing. What is that? Understanding equity share is like understanding God. Never understandable. It will be seeming to be understandable, but not understandable. So, it is the most confusing concept because share can be predicted, cannot be. That's all. When something you can't predict, it will be very, very difficult. Share valuation becomes difficult because 3 factors affecting the asset, being the cash flow, being the life, being the required rate, all are complicated. That complication of 1% you are going to see in this chapter. Which chapter? Cost of capital. In the concept called as KE. KD means cost of debt. KE means cost of equity. KO means overall cost. KO means? Hope everyone understood the second. Now we completed second part of basics. Understood or not, everyone? Sir, writing part, all these you can do. Understood or not, everyone? Yes, we are comparing dash with dash. Price with? Value comes from MRP. Value will come from future cash flow, sir. You are buying asset today na in future. Wrong, start from beginning. If I listen wrong answer, I will repeat. How dare you can give wrong answers? I will again repeat. Listen. That means you are not listening properly. Start again. What is the comparison we will make? Versus price versus price is the thing which you need to pay today na in future. Today. If you buy, you will get cash flows in future. Clear, everyone? Today is a outflow na inflow na? Future la? Now can I compare future inflows with the present outflow? Therefore we should bring all the future inflows into present value. To bring the future to present, I require something or not? The time machine is what? Fantastic. That's the meaning of this concept. Everyone understood the concept clearly or not? So for that comparison, you are bringing everything. Okay? Write down this. One second. I will make it full screen right down. First one, is it visible to the last benches also, everyone? Thank you. Have you completed land and building? Equity? Sir, YTM means yield to maturity. It will come in the first chapter, right? We can understand. As of now, copy down. Completed? Completed? So, question number 1, why this chapter? Question number 2, various types of cash flows and corresponding PV factors. Two things are over. Next. See here, concept of time value of money in a nutshell. The concept where, please, same concept what we learned in a different way of presentation. The concept where money derives its value and get influenced by lapse of time is called as time value of money. Listening. There are two types of time value of money concepts. First one, discounting. Second one, compounding. Discounting is a concept of bringing future cash flows to present. Next, compounding is a concept of taking present cash flows to future. Clear? See the diagram clearly. Future is brought to, called as discounting. In the same way, present is taken to future is called as what? Compounding. Already we have learned this concept or not? Yeah. Summarize everything. Present to future. Present to future. Future to present. Which is more suitable method for entire SFM. Why? Investment we will put today. From that we are expecting the cash flows in future. Therefore, when you put expenditure today, you should compare inflows also in today's terms. So therefore, obviously we will make discount. Except for one chapter. One. Capital budgeting la one concept will come called as NPV IRR conflict. At that time future value will come. Okay, what is that? NPV IRR conflict. Okay, variety concept is there. There you will understand. Second place, CA final. There is a chapter called as futures. Name a clear. You should not bring future to present. You should take present to future. There is a chapter called as a futures. Derivative futures. Okay, options and futures or futures and options. The futures there. 99 cases. What we use? Discounting. Means bringing, not taking, present to future. Everyone understood the logic clearly? That's also, that's the main point. Okay. Next. Before even going into that, first write down concept of time value of money in a nutshell and two types of impact. Write on this. This is already discussed, nothing new. Okay, please write down the notes clearly. Question number 3. First line also you didn't write. Don't write question 4. Write up to question 3 only. It is there, no, don't copy that, because below this you need to write one numerical illustration. Completed? No. So discounting is a concept of bringing future to present. Compounding is a concept of taking present to future. One small pictorial presentation also let us see. Numerical illustration to make you more understand about this concept. See the screen once. This one. See the screen clearly, please. See that. Year. What is a year? 0. Means today. Today is called as year 0. Today, please. Today I am putting some outflow. I need to see whether this outflow is compensated with the inflows or not. Sir, no, anyone will buy the asset only to check whether at least the inflows what I get should at least equal to outflows. Sir, I will purchase for 1 lakh, I will get income of 20,000, will I buy? No. Means my inflows should be at least matching what? My outflows. Clear or not? My inflow should at least match outflows. So therefore, I am first putting some outflow in the 0 year. So I am expecting to get how much inflow at the end of first year? I am expected to get how much inflow at the end of first year? How much at the end of second year? How much at the end of third year? Can I add these three? Why you cannot add? All the three belongs to three different time frames. First you need to bring all inflows into current time frame, present time frame. Therefore, we need to bring third year to 0. First, third year to 0. Second year to 0. First year to 0. Now you should only answer me. We are going to discount a compounder. Discount a compounder. Discounting. So, when you are discounting, PV equal to FV divided by 1 plus R whole power N. Common sense you use. How much is this cash flow? Received today, na? After 1 year, after 2 years, after 3 years. I have to bring this to 2, 1, 0. Means how many times I need to discount? Answer. Now tell me, sir. FV, how much? 2 lakh divided by 1 plus R whole power 3. Everyone, tell me this. How to write? 1,50,000 divided by 1 plus R whole square. Whole power 2. If you make, you are going to discount for how many times? 2 times. How to write this? 1 lakh divided by 1 plus R whole power 1. Even if you don't write, no problem. You will get one time discounting value. Clear, everyone? Yes, now we are bringing future to present, present to future. This is, that's why. See this, the concept of bringing all the future cash flows to present is called discounting. Or there is another way. Tell me. This is received at the end of, I will take it to third year, future. This is received at the end of, take it to third year. This is already in third year, you need not again take. Can I add all the three or not? Directly can I add all the three? No. Can I bring everything to future and add? Yes. But mostly we will recommend only first model because outflow is actual. Clear, everyone in the class? So this is the idea behind the pictorial presentation of discounting and compounding. Please copy the notes. Once again, this is all notes for what? This whatever you are writing now today notes, it is on what? Today you have written notes. Now from the beginning you are writing some notes. This notes is regarding what chapter, what concept? This is the basics to financial management, not inter. Final, this is the basic. First I will teach them. Then only we will go into the first chapter. That if you remember foundation, components of law. That I will teach in intros again. That does not mean that it is applicable for foundation. Likewise, this is a introduction to financial management, not inter or final. Completed writing? Write down this pictorial presentation of discounting and compounding. So completed writing. So concept of bringing the past to future is compounding and future to present is called as discounting. These are the various concepts that we learnt. Up to here, are you all comfortable and understanding and writing? Listen. Next. Now keep the heading. Practical examples to understand time value of money concept. That is not properly visible there, you write down. Practical examples to understand time value of money concept. Practical examples to understand time value of money concept. We are going to do at least 7 to 8 illustrations, not today. It takes time. You have to understand every number, not just formulas and answers. So for that it takes some time. Therefore first what you have to do, please, value can be of two types as I said, present value, future value. If you want to bring future value to present, the formula is FV into 1 by 1 plus R whole power n. That is also written as FV divided by 1 plus R whole power n. So first write down the formula as it is, logic and other things we will see in the next class. It takes time. Minimum 45 minutes time will be taken to explain every formula. So for today, first day session, no problem, you just copy down the formula. Both sides, present value and future value. Value can be of two types, present value, future value. Example don't write. Write only up to here. Two formulae. ROI means return on investment or rate of interest. You can call in any way. N represents years or terms. Or you can also write time. First tell me, everyone completed writing? Yes, everyone completed writing? Yes, the first question that you should get, listen, practical illustrations on this, numericals, meaning, understanding, including the formulas, interpretation, all those things we will do in the next class. But don't pack the bags, I am not done. Listen, I said that we are going to do all those in the next class, that's all. I am not telling I am going to complete now. Please listen, I have one small question here. Whenever you are going to calculate present value, you are dividing FV into a FV divided by a. Answer. In foundation also you might have done the same. PV equal to FE by 1 plus R. FE equal to PV into 1 plus R. Why we are doing like that? Why we are dividing is a question. Now see, great answers will come. Why? Did you understand my question, everyone? Tell me what is my question? Why we divide for discounting? Why we multiply for compounding is a question. So, any guess? Sir, let's not waste time. I will only tell you, I will give you two statements from your childhood mathematics. From there you can understand easily. When you, listen. 1 second. When I am taking present to future, we call it as discounting or compounding. Means value should increase or decrease. Discount itself means you have to reduce the value or increase the value. Everyone? Now, mathematics, there is a statement, analogy we call. Do you know what is that? Two types of analogies are there. Number one, division is continuous subtraction. Division is continuous subtraction. Okay, multiplication is continuous addition. What I said? Addition. I am not asking what I said at the last. Entire statement I am asking. Everyone repeat. Division is continuous subtraction. Multiplication is continuous addition. There is no concept of divisions and multiplications in the mathematics. Additions and subtractions in a different form. Sir, I will give you an example. 15 by 3. 15 by 3 means what? You can reduce 5 3 times from 15 to give a remainder 0. 15 by 3? 15 main number divided by equal to means what? I can reduce 5 from 15 how many times? 3 times before it becomes 0. Clear, everyone? That means 15 minus 5 minus 5 minus 5 equal to 0. That means 15 by 3 can also be understood as 15 minus 5. So the answer what you get in the division, if you subtract it for that number of period, it will render 0 value or not? Yes, answer. Yes, so to subtract something, instead of using subtraction, I can also use which method? Division. Answer. Division. Discounting means value should reduce or increase. So it should give a effect of subtraction or multiplication. Therefore what I have to use? That's why they will use. Are you understanding the point or not, everyone in the class? That's why they divide always. It's a continuous subtraction. I need to reduce its value. So therefore formula uses a division. Obviously opposite is the case of multiplication, because I need to add. Clear, everyone? 5 into 3? 5 into 3 means I can add 5 3 times to reach 15. Multiplication. So multiplication can also be understood as addition. Compounding means what? I will get interest, add, again interest, add, again interest, add. So additions can also be understood as. That's all. Everyone understood the point or not? You may ask a question. Then directly they might have used subtraction only, kada? Did you understand or not? Instead of using this way, sir, what you said is division can also be understood as continuous subtraction. Multiplication can also be understood as continuous addition. then they would have used that only directly. That is difficult because if the asset value is 70 years, I need to make 70 subtractions. If the asset value is 100 years, I need to make 100 addition. Rather than making 100 additions, I will multiply by power n. That's why multiplications and divisions came. Everyone understood the concept clearly or not? That's how they derived the formula. This is the first day analysis on the formulas and other concepts. Everyone understood whatever we discussed or not? Yes, sir. Tomorrow session we'll see the new concepts. Okay? Thank you very much. Thank you. So very good afternoon everyone. So FM classes will be at a standard above something. So therefore let us make it on a more professional front rather than just like normal classes. So therefore once the video output comes out, then you can understand very good how impactful it will be. So before we start yesterday's session, we started with a concept called as a time value of money. So in the concept of time value of money, we have completed understanding what do you mean by asset. So in the entire FM, we will do only one thing, valuation. So valuation of what? Asset. Asset valuation is the idea behind this chapter. Clear everyone? Okay. Listen carefully. From today onwards, people will come on stage. They will answer. Okay. And they will give the answers for questions. Get ready everyone. Am I clear? Everyone get ready. Formula when I tell, I don't want your formula answer. I want derivation, interpretation, how the formula came. So get ready everyone. Okay. At least everyone in the class, minimum, at least 4 or 5 times you will come on stage by the time classes are completed. Okay. No one need to feel bad. Why you are not calling me? Everyone will get your turn. Okay. Sir, okay. Let us start with the basic concept of time value of money. So what we understood is time value of money represents the value which the money will get because of time is called as time value of money. I said in the yesterday's session also, if I have a 500 rupee and another 500 rupee note, both will have a same value today. But 500 rupees received after 1 year, 500 rupees received today, which anyone will prefer? Today's 500 will be preferred more. So today's 500 will have more value than future 500. Clear? Today's 500 will have more value than futuristic 500. So futuristic 500 will have lesser value today than today's 500. Future value, if you are bringing to present, we call it as discounting. There are 2 techniques in time value of money. One is called as discounting. Second one is called as compounding. Compounding is a situation where we will take present cash flows to future. Discounting is a concept of bringing out future to present. These are the 2 things that we learn. Clear? And we try to understand that there are various kinds of assets. Real assets and financial assets. Real assets will be totally land and building, plant and machinery, those type. If it is a real asset like land and building, every asset will have 3 kinds of phases. Phase number 1 will be the life. Phase number 2 will be the cash flow. Phase number 3 will be, I repeat once again, phase 1, life. Phase 2, phase 3. Now the question arises. Phase 1, phase 2, phase 3, required return, all these things we have understood now. Now the question arises. Phase 1 will be the concept of life. Life of a land and building. So listen. So whenever there is an asset, asset will have a life. Real estates like real assets like land and building, plant and machinery, all these things will also have its life. But life is almost we can calculate to an accuracy with the scientific techniques available. Okay. So land and building, you can estimate a life of 50 years or 60 years or 65 years, 45 years like that. Depending on the quality of construction, engineer will decide. Second type will be there. Financial assets. In this again, two types of instruments are there. Number one, equity. Number two, debt. In this, the most easiest one is debt, because everything is certain. Almost certain, if not. Certainty number one, life is certain. Because at the time of issue of debentures, we will clearly tell how many years debenture we are issuing. 5 years or 4 years or 10 years. We will clearly explain in the issue document itself. Clear, everyone? Yes, but when it comes to equity, it's not like that. Sir, first let us complete for the debt. Debt should have three things to value that. To value any asset, three things are required. Number one. Number two. Number three. Again, once again, number one. Number two. Number three. These are the three things which are very much required to value any asset. First one, life. Life of a debenture, you need not tell. At the time of issue of debenture, company only will tell it. Clear? Second one, cash flow. Cash flow also you need not do any estimate. At the time of issue of debenture, interest rate will be decided by company itself. 10 means 10% throughout 5 years. 5 means 5% throughout the year. 15% means 15% throughout the life. So, certainty is there. Life is certain. Life is certain. Cash flow is certain. What is the third one? Required rate. That is almost nearing approximate we can calculate using a model called as a YTM, also called as a KD. That's the first chapter we are going to do. In a debenture, what are the two things which are absolutely certain? One, life. Second, cash flow. To value asset, what are the three things? Life, cash flow, required rate. In this, what two are certain? So, what is only uncertain? For that only chapter came. Are you understanding or remaining? Anyway, you need not value. What is required to be valued? Required rate. For that only first chapter. Clear, everyone? Okay, done. Next, after that, equity, the dangerous instrument in the list. Okay, why I call it a dangerous instrument means it is not that easy to value the equity. Very difficult, because three things are uncertain. Number one, life is uncertain. Life of a company will be? Life of a company will be. When life of a company is perpetual, till the life of company, what will be there? Share. That means life of a share is also perpetual. So when the life of a share is perpetual, when life of a company is perpetual, you don't know where it ends exactly. To calculate 10 years, 20 years, 50 years, 60 years, life can be calculated or cannot be. Then it becomes a first thing. Life itself has become difficult. Uncertain. Number two, to value any asset, what is the second ingredient required? Everyone. Most uncertain. I will pay dividend, I may not pay dividend. Section number 123, subsection 1, class A and B of Companies Act makes dividend payment optional on the board of directors of a company. Clear? 123, subsection 1, class A and class B. Companies Act clearly said that payment of dividend is at the absolute discretion of board of directors. That means board of directors may either choose to pay, may choose not to pay also. They can do any of the things. They may pay, they may not pay, anything can happen. That means your estimation of dividend is not dependent on your estimate actually, it is dependent on the discretion of a third party called as a board of directors. Are you understanding or not? Yes, who should propose dividend? Who will propose dividend? Board of directors will propose the dividend. Who will declare the dividend? Shareholders at a general meeting under section number 102, subsection number 1, class number A. They will declare the dividend at an annual general meeting. Who? Shareholder. There is a procedure for payment of dividend under Companies Act. In that section number 102, if you find time, you can read after the class. It will be called as an explanatory statement and ordinary and special business. There, section number 102, subsection number 2, class number A, subclass number 1, 2, 3, 4. In that subclass 2, will tell about dividend declaration. Dividend will be proposed by directors, but will be paid by shareholders. Now answer my question. Shareholders can't declare unless board propose a dividend. Listening. Shareholders can't declare the dividend unless board proposes a dividend. That means two things are there here. I have to estimate the cash flows of a equity share. I have to estimate cash flows of a equity share. If you have to estimate the cash flow of a equity share, what is the cash flow each equity share will give you? Don't sit silent, start from the beginning. To value any asset, what are the three things required? Life, cash flow, required rate. What is the life of equity share? Perpetual. Over, done, uncertainty. Second one, we are now discussing about that. Come back. Some people already tripped their mind, went somewhere, come back. So, second one, cash flow. Cash flow that equity share gives is dividend is guaranteed amount, may or may not. If board propose, shareholders declare, then dividend will come. That means my declaration is dependent not on me. My declaration is dependent on two persons. Number one, board should propose. Like me, all other shareholders also think and they should declare. If both the conditions are satisfied, then I will get the dividend. So estimation is easy or difficult? That's why in stock market is never predictable. No one can predict how the stock market will move on every day, because it depends on every one person's percept. It's a subjective judgment of every person. For example, I presume, sir, last year SBI has declared dividend of 5 rupee 40 paisa. If any person comes to me and asks, Koushik, how much you are expecting next year? Maybe I tell, next year I am expecting 7 rupees. It may be 7, may not be 7. Are you understanding or not? Today's prices you are seeing on the stock market are on the basis of estimates they made for future. Clear? What is the value of asset? 1 second. Some people already forgot. Start. What is the value of an asset? Present value of future cash flows discounted at a required rate of return. Today, if there is any price in the market, it is a present value. Present value of future is an estimation, a guarantee. That means on the basis of estimates of public, today's price is getting traded like that. Some estimates are made. Everyone has his own estimate. For example, I have an estimation of fall in price in future. Estimation of fall in price in future. I expect that prices will fall today na in future. Then I will want to stop buying today and I will start buying in the future. Number one. I feel that prices will rise in future. What I will do? I will buy and I will sell in the future. 200 persons are there in class. Say example, 150 students are having a percept that share prices will increase in future. What you will do today? What you will do in future? Answer. 50 students are having a percept that share prices will fall in future. Listening or not? What they will do? What they will do? They will sell today. If they have shares already, they will sell. Now answer my question clearly. How many sells came? How many buys came? Who is dominating the market? On the day that green mark will come. That means the red mark is there, green mark is also there. Green is more dominating. The candlesticks will be at the top green side. So you can see that visibly, you can see every single day during the trading sessions are going on. It is easy. How many buy orders came, how many sell orders are coming. You can understand the market sentiment. That means how they are feeling about the share on a particular single day. Most of the people are doing that, means we will also go in the same way or not. That's how these charts will help us. That means it will make you to understand the market sentiment. Clear? That means if you understand what I said, I am buying today to sell in or I am selling today to buy in future. That means always I am concerned about today na. I take all today's actions for today na, for future. That's all. That's why we tell always the future cash flows are more important in FM. Are you understanding or not? We are not concerned about present. Present is only to value the asset to today. But that depends on the future cash flows that it is going to give. Everyone understood the point clearly or not? So what is the value of asset? Future cash flows discounted at required rate of return. Done. After that, okay. To value any asset, life cash flow required rate. Life uncertain. Cash flow most uncertain. And third one, that is the real hell. At least to some extent, we on the past trend we can estimate how much cash flow a company will give. If you see TCS, TCS is one of such companies which will pay almost consistent dividends every year. They will maintain the range of dividend, 1 or 2 rupees here and there. Okay, so they will consistently pay some amount of dividend every single year. Problem is life anyway perpetual. Second one, most uncertain. Third one is most uncertain. Reasons are clear. Required rate, how much you want, how much return you are expecting. Remember forever, in FM or in SFM, whenever I say return, return is always expressed in percentage terms, not in amount terms. Expressed in? Not in? Use your common sense and tell, if any. He got 100 rupees profit. A got 100 rupee profit. Listening? Yes, sir. Okay, A got 100 rupee profit, means return in rupee, 100 rupees. B got 50 rupees. A 100, B 50. A is better, B is better? Wrong. A invested 500, B invested 100. Now, if you express in percentage terms, 500 ke 100 will be 20%. 100 ke 50 will be 50%. Who is making bumper profit? A na B na? That's all. That's the idea behind. So, return should be expressed in rupees or percentages. Yes, always percentages. Stock market never recognizes rupees. Rupee will always manipulate, but percentages do not. Clear, everyone? One point. Repeat. Return means what? Another time. Return means what? Another time. Return means what? Yes, return means a percentage return, not a rupee return. Clear, everyone? So that's the point number 2. So that percentage, how much return I should do, I should ask from a particular share itself is learnt in CA final in one of the most important subject. How capital budgeting is important for FM, like that in CA final there is one chapter called as portfolio theories and asset pricing models. So that is that much important. That's a capital budgeting of CA final. So that very important chapter. There we will learn the strategies and techniques of valuing RR. You will be convinced at that time, like this markets are getting traded. So you will then understand how the share prices are moving up and down on every single day. This is how the calculations are being made. Everything you can understand when you come to final. A chapter is there called as a portfolio theories and asset pricing models. There you will see into that. Sir, anyway, everyone understood the logic clearly, yeah? Yes, sir. So, sir, in CA Inter, RR of the equity, means required rate of equity, we won't calculate. They have given one small formula. RF plus beta into RM minus RF, one small formula was given. But what I will do in the class is, I will tell you how that formula came. It takes around 1.5 hours to explain the derivation to that formula. First chapter alone I will tell that. Okay. So you will then understand. Summary is this much. You can understand how the main concept in final will be. So the summary, that RM plus RF plus beta into RM minus RF, what is the meaning of that particular formula? How it is derived? What is the logic behind? Those we will understand in CA Inter also, I will tell, but not so deep like CA final. Just a summary I will tell you. Rather than institute na worst presentation, 1 page la completed. They have given that capital asset pricing model. Okay, K equal to RF plus beta into RM minus RF formula, 2 questions over. We won't do like that. We will understand the intention behind them, the logic, science behind the formula, everything we will understand. For that, I am the guarantee. So every concept we will learn in a scientific way as what the models really want to convey. Sorry, up to here, everyone comfortable in understanding the points? Yes, this is the revision of the previous class. Every day we will do like this. Previous days are the cumulative revision of all the formula, everything we will do every single day. So target on understanding the concepts clearly up to what we discussed in yesterday's class. Are you all comfortable? Yes, sir. Next concept. Please open your notes. Everyone had your notes? Yes, yesterday, okay, no problem. At least today, everyone had your notes with you? Yes, I think you have written up to here, right, yesterday? Okay, just a minute. Okay, see here. Example. Please see the screen there. Please see the screen. Point number 1. If you can observe the screen clearly there. Example. Present value of single cash flow. Present value of single cash flow. See the screen once. Okay, I will change the mode. You see now, present value of single cash flow, year 3 years after, you are going to receive a cash flow of how much? 1 lakh. Answer? 1 lakh. Interest is how much you are expecting? 8%. Below what I said, please read the statement. I need rupees 1 lakh after 3 years. So, how much I should deposit today to have a maturity value of rupees 1 lakh after 3 years. Now tell me, in future I want 1 lakh, today I want 1 lakh. Answer? Future I want 1 lakh, not today. Clear everyone? So formula, tell me, I want discounting of 1 lakh, compounding of 1 lakh. 1 second. Last benches, everyone please respond properly. I have a very bad habit of repetition. If you don't listen, I can't do anything, but I will repeat once again. Your time only will get wasted. I mean to say very seriously. So please listen carefully. See the screen. If it is not visible, at least tell me. I will zoom the answer. Is it okay now? Now answer. How much I want after 3 years? Now I want future value or present value? Means I want to know how much I need to deposit today at how much percent? To reach after. That's all. That means I want present value of future cash flow. Na? Future value of present cash flow. Sir. I mixed answers I received. I want present value of a future cash flow. Na? Future value of present cash flow. Na? Present value of future cash flow. That means I want how much I need to invest today, which will make 1 lakh. 1 lakh when? Today, na? After 1 year. That's all. That means I want the present value of 3 future years cash flow. I will receive money next year, second year, third year. How much? 1 lakh will be received after 3 years. If I invest 1 lakh today, na? I should invest lesser than 1 lakh, which will be made as 1 lakh after 3 years. That means I need to invest 1 lakh, less than 1 lakh. So it should be lower than 1 lakh, higher. Therefore, what I should do? Discount it. Yesterday I told you very clearly. Division is also called as a continuous subtraction. It should be lesser than 1 lakh. How much it is a question now. We want PV value or FV value. Formula equal to PV equal to FV divided by 1 plus R whole power N. How many times? How many times? You can do like that. Or FV minus 1 plus R whole 1 plus R in minus 1 plus R minus 1 plus R 3 years if you do, you will get the same answer. I told you division is also called as a continuous subtraction. Did you understand my point or not? So therefore, instead of doing those times, they will just keep n place, they will put 3. So they will divide it. So FV divided by, read, FV divided by 1 plus R whole power n will give you the answer. Please write down, write the question. Keep the heading example. Present value of single cash flow. 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 Write down the question. Copied the question, everyone? Now write down the answer. We want to know the present value of future cash flow. Formula is, keep it in the box, PV equal to FV divided by 1 plus R whole power n. Completed doing the answer? PV equal to present value, F equal to future value, R equal to rate of return, N means time periods. Time is very important. Because that decides how many years to compound or discount. Done with the answer. So PV equal to FV 1 lakh divided by 1 plus R. I told you already. R should be always in which terms? Sir, you didn't write in percentage, sir. 10% can also be written as 0.1. So 10% means 10 by 100 or not? Hello, I am talking to you. 10% means 10 by 100. 10 by 100 can also be written as 0.1. So now tell me 23%. How to write? 0.23. 13%. 5%. 0.0. That's all. Everyone understood? So percentage means you need not write in percentage. You need to adapt that percentages in decimal form. So instead of writing 15%, you can write 0.15. Clear, everyone? Okay, next. Next. Everyone got the answer? 75,130 as they shown there. Now listen carefully. This is not new for you actually, because this is already covered at CA foundation. Okay, time value of money. But I want the meaning. What this 10% mean to say? Don't tell interest. How to interpret this 10% is a question. How to interpret that 10%? Mathematics up to here you will learn. Pakka. Because it is there in your syllabus. Na? So I don't have any doubts about that. So definitely you might have learned. But my question is not on that particular issue. My question is, when you are seeing this 10%, what is the real meaning of the 10? What is the 10%? Don't tell inflation, opportunity cost. Don't make it so complicated. I'm not asking terminology or technical language used on that. I am asking what will be that 10% means. You will tell interest or you will tell discounting rate, like that you can use various words. Now listen, 75,130 should be deposited today na, after 3 years. To reach today na, after 3 years. Everyone? Now my question starts. Answer this question and then you can understand the meaning clearly. Okay? Tell me now. For example, you do one thing, take calculator, 75,130. How much you are depositing today? 75,130. I'm talking to everyone. How much? At what rate? 10%. At what rate? 10%. Means 75,130 if you deposit, every year it will give 10% on that 75,130 or not? Yes. Means tell me, 75,130 into 10%, how much? 7513. Hello? Everyone listening? Yes, so tell me. Now tell me, 75,130 I will receive today or I have to invest today after 3 years. I have to invest today after 3 years. Today I need to invest how much? At what rate? 10%. Every year how much I will get as an interest? 7,513. For how many years? 3 years. Multiply. 7513 into 3. 7513, yeah? 13 into 3. How much? That means for your investment of 75,130, clear? Totally how much interest you got? 22,000. Add that to 75,130. 97,000. It is not equal to 1 lakh. 1 second. Don't get excited. I will ask you one question, you answer this at least. Tell me, you went to a bank. You made a deposit of 1 lakh. Deposit of 1 lakh. Now tell me, bank will pay interest on compounding basis, sir? Simple interest. Compounding, which bank? Give address, I will also go. Then no one will invest in stock markets. Yaar, compounding interest paying banks in India? Who said? Which bank is paying compounding interest? Please tell me one bank name. Okay, this will be the last FM session. I will tell I am not understanding FM properly. I am very sorry. No bank will pay compounding interest. It is against to RBI guidelines. RBI to the banks will give in which interest rate? Simple interest. What RBI does with banks, bank will do the same with public. Rates will change. Concept is same. Okay. Banking Regulation Act prohibits compounding interest. Compounding interest, do you know on what we will pay? On penalties we will pay. If you have to pay EMI to the bank, if you don't pay, then bank will impose compounding interest on you. They will not pay on your deposits. Are you understanding or not?
Yes, sir.
Tell me now, see the screen. 75,130 I am depositing today after 3 years. Today. Answer.
Today.
Means my 75,130 will pay me 7513 interest in the particular 75,130 principal I invested. Clear? I will give you one example, sir. Answer. I made a FD of 1 lakh. FD, fixed deposit of 1 lakh. Now answer. 8% interest. So on my 1 lakh, how much I will get after 1 year? Answer, sir. Because principal invested is 1 lakh. On that 8%, 8,000. Second year, again principal invested is how much? 1 lakh. On that again 8% will come. So again how much it will come? 8,000. That means something they want to tell through this number. 75,130 is invested principal. At how much rate? At how much rate? Always remember, PV factors assumes reinvestment. PV factor assume reinvestment. Like in the previous example I said to you, how much I invested as a FD in the deposit? People are not in this world, come back again. How much every minute please be in this world? Why your brain will get tripped all of a sudden? Again, how much you deposited today? In a bank you deposited 1 lakh. Okay? 8% interest. First year ending, how much you got? 8,000. How much you got? 8,000. You have to reinvest that 8,000 again in the same FD at the same rate. Then only 1 lakh will come. This 1 lakh is always a manipulated number. That's why whenever mutual fund companies are there, which one? We are giving 22% return. They will announce on hoardings. First you should see there will be a small star mark. Okay. Not market conditions. They will clearly write that these are on the basis of, these are the amounts, whatever the return 22% what they say will be true only if the amounts are reinvested at the same rate of return. I will give you one example, listen carefully. There is a mutual fund. There is a mutual fund company. I put 1 lakh. Miracles happened during their stock market raised. Okay? 18% return I got. Listening?
Yes,
how much I invested?
1 lakh.
How much I got? 18%. Means how much rupees? 18,000 I got. Clear everyone? Now what I will do? This 1 lakh, this 18,000, both. Now how much? 1 lakh, 18,000. I will reinvest back. I will reinvest back. Now tell me, 18,000 next year also I got. I repeat, everyone be in this world. 1 lakh I invested. 1 lakh I invested. How much it is? 18%. Means how much I got? Totally how much it is? I again reinvested back. 18,000 I received again. So how much percent? Wrong. It is 18,000 on 1 lakh 18,000 now. Are you understanding the point or not? That means, listen, your 1 lakh 18,000 giving 18,000 is not great. When 1 lakh has given 18,000, 1 lakh 18,000 should give more than 18,000. Are you understanding or not? That means, answer my question clearly. Market has given me 18,000 next year also. First time 18,000 I am very happy. Second time 18,000, I am unhappy because that 18,000 was received from my investment of 1 lakh 18, not on 1 lakh. Listening everyone? Yes, that means it should give more return than 18% to get that amount. Are you understanding the point or not? Yes, same way, try to understand, see the numbers properly. See the screen, I will show you the workings behind this 75,130. See there. First, interpretation of this formula or numbers. Wrong. 75,130 is the principal I invested when? Principal of 75,130 is invested when? Today na, after 3 years. How much I invested? At what rate? Generally, every year it should give how much? In that way, if you do, how much you got at the end? 22,540 interest. How much principal? Total put together became how much? But we should reach how much? That means something is going wrong. 10% if you take directly, listen. 10% if you take directly on 75,130, it will become 7,513. Every year 7,513, 7,513, 7,513 if you get, at the end you will get 22,540. If you add it to the principal of 75,130, it comes only to 97,670. Means getting interest every year is not the requirement. Something you need to do with that 7510 or 7513. What I have to do? This is the correct methodology. Read. First year, how much I deposited? I mean first year beginning, 0 year, how much I deposited? How much interest I received? At the end of first year, how much it became? 82,000. Now how much I received at the end of second year? First year, 82,643. Next year, how much I reinvested? 82,640. Now I will get interest on 82,643, which became 90,907. At the end of, again I reinvest that 90,907. It becomes how much? 99,998, almost reaching 1 lakh. Means what is the assumption of a PV factor? Reinvestment at the same rate. Reinvestment at the same rate. You go to bank. Bank said that we will pay you a return of 10%. Means if you don't reinvest, you will get less than 10 on hand. 97,000. How much is 97,670 by 1 lakh will be. Listening everyone? 97,670. Say for example, if you have got that, that means you are getting 10% or lesser than 10%. Less than 10%. That means in order to achieve the return of 10%, you should reinvest again. I repeat one more time, listening everyone. If you invest 75,130, listening everyone, if you invest, when? Wait for. It will become. Provided intermediate funds are there, na? Which funds? What do you mean intermediate funds? Interest. First year how much? That I should keep in dustbin, eat or reinvest. At what rate? Not available in the market. What to do? Cry. Therefore, never believe in the bank rates. Are you understanding or not? Sir, I tried to reinvest at the same rate, sir. RBI reduced the interest rate, sir. 10 came to 9.2, sir. Now how to do, sir? Nothing you can do, sir. For that, there is one strategy called as immunization. If you want to learn, recent CA final marathon one lecture bond immunization strategy was kept. How all the banks will maintain the standard rates of interest. Means, did you understand the problem what I said, no or not? How much you invested? How much I invested? First year how much you got? That amount you need to reinvest it? Ade, what is the same rate? Not there, market downfall. Even then if you have to get that 10%, there is a concept called as a immunization strategy. Beautifully the banks and mutual funds are doing today. through that strategy, they will still get the 10% return. That's a science behind that. Formulas are there. Conceptually, you need to understand. But there is a strategy also for that. In the world, there is no concept called as a no strategy contained financial instruments. Every financial instrument is having their own strategies. Some may work, some may fail. Am I clear? Because it's always stock market. You can't control that. Everyone understood the logic or not? This I can present in much beautiful way. Tell me now, how much I invested? Till you answer, I will ask the same question. Either you should get irritated or you should answer consistently the same thing. So first, I will tell you, I will draw a statement and I will show you the proof clearly. Year 1, 2, 3. Yes or no? Yes or no? Tell me, cash flow. How much cash flow I am getting at the end of first year? Answer, sir. 7,513. 7,513. Now tell me, balance. 75,001. No, balance means not that. Listen. 75,130 I invested today or not? You just calculate what I ask, please. Don't do creativity. Okay, listen. 7,513 I received as an interest at the end of first year or not? I will keep this interest idle. I have to reinvest. Okay. Second year? 7,513. Next third year? 7,005. This is what bank really pay you. What you have to do? Reinvest. So tell me, 1 means first year end, first year beginning. Total life be in this world. Total life 3 years. In that 7513 comes today after 3 years. After first year, second year, third year. You should keep them idle, reinvest. By the end of first year, if I go for reinvestment, I can reinvest for 3 years, 2 years, 1 year. See again, start from the beginning. 7513 is the interest that I received today after 1 year. After 1 year, total life? 1 year already? That means you can reinvest for how many years? 2 years you can reinvest it. Clear everyone? Tell me, balance how many years? This 7513 received today after 2 years. That means I can reinvest only for another 1 year. How much it will be? 1. This received today after 3 years. By the end of 3 years, I want my 1 lakh. No reinvestment. I have to take my money. So how many years? 0. Now tell me, this is the value at the end of this. Answer. When I reinvest this for 2 years, I will get a future value. Formula tell me, future value equal to and value into 1 plus r whole power n. Everyone participate and tell me, at what rate I have to reinvest again? Very good. Tell me, 7513 into 1.1 whole square. 7513 into 1.1. 7513 into 1. Do you understand why 1? 1.10 power 0 is 1. A power 0. A power 0. 1.10 power 0. That's 1. Understanding or not everyone? Tell me, what is the future value? 7513 into 1.1 into 1.1. 9. 9091. Second. Now do you understand the numbers? 264. Next, 7513. 75 at the end of listening. Now tell me, at the end of third year, how much I will be receiving totally? 24 8 68 plus how much I invested? Total them. 90, 998. This is how you got those numbers. That means you have to reinvest again at the same rate. Then that 1 lakh will come. This is a real meaning. Did you understand or not? Yes, sir. So tell me, bank will pay you how much? 7,513. They don't pay on compounding basis. It is your headache to reinvest them again. Sir, when I try to reinvest, market interest rate falls, sir, RBI reduce interest rates at 10%, became 8%, sir, but I want 10%, sir, what I need to do, sir? Then first point, you go to a financial analyst who can plan your finances properly. So who can show you a route where you can get again 10% even though there is a market fall, using a strategy called as bond immunization strategy. If you want any idea, consultation fees, Koushik Mukesh always available. Okay, so try to understand clearly. The point behind this concept is, it is the headache of investor to do what? Reinvest. Bank will not tell, come, first year you got 7,530, there they will give 10, go and reinvest. Who will not tell like that? Bank will never tell. That is your headache. Mutual fund also won't tell. Arre, market fall happened, I will give you 10. Mutual fund also won't tell. It is until you are. So tell me, when the hoardings, advertisements you see, 10%, 12%, 20%, what is implied within that percentage? You have to unsatisfied. You have to at the same rate. Then only you will get that 10% or 12% or 15% or 20%, as the case may be. Understood the logic clearly or not? Yes, this is the real meaning of the 10% in CA Foundation, what you learned. 10% this much science is involved. Clear? Understood the point, everyone? Yes, any one of you in the class didn't understand, please raise the hand. I will repeat one last time and I will go to the next one. If you didn't understand, don't hesitate. Sir, if I raise the hand, you will target me. Sir, first point, I won't do. Second point, if you really don't want to raise the hand, at least like Akasa Ramana, somewhere say yes. I will repeat once again. Shall I repeat once again? Shall I repeat? One says, shall I repeat? Shall I repeat? Pakka? I can go to the next one. Yes, sir. Sorry, okay. So now, did you understand the meaning of reinvestment now? So really bank will give you only, it won't give you compounding. It is your problem where to reinvest this again. Are you understanding or not? Yes, sir. 7,513 came, you ate. 7,513 came, you ate. 7,513 came, you ate. At the end of 3 years, you will have 24,868. You will have 22,540. Then your return will be 10, not 10, not 10. That's the meaning. Understood the point clearly or not? So this is the meaning. More about this we will understand in capital budgeting. Final. Then what you will do in inter-sleep? So see there. See the screen once. This is what you need to write. First, read the notes. PV factors always assumes reinvestment rate. Reinvestment, that means if PV is 10%, the return on investment shall be 10% only if that amount is reinvested at the same rate. More on this shall be discussed in the chapter capital budgeting. There one concept will come, landsliding concept. Name of the concept I will tell you, you remember. The concept is called as a NPV IRR disparities and rectifications. At that time, shake. So at that time you will really understand the meaning of reinvestments. Before that, please copy the notes. Interpretation. Write down. Please don't waste time. Up to here also you didn't write. You are writing simultaneously both the sides. How can you write like that? How you can write simultaneously on both sides? Completed the left side. Huh? Huh? Bottom there is a point. Is it visible? So you do whatever you want. Copy down the other side also. Left side content completed. Okay. Write down the right side content. Make it fast. One name down, one name upwards, one name downwards. So completed writing. Write down these notes also at the last. Note, PV factors always assumes reinvestment. That means if PV is 10%, the return on investment shall be 10% only if that amount is reinvested at same rate. Capital budgeting, in and out regarding this we will calculate. Seriously, believe me, each and every point inside the PV factors you can understand. Completed. So PV factors always assumes reinvestment rate. If you want the 10% reinvestment, investment rate, you should reinvest at the same rate of 10%. Next one. So now we completed the basic concept of PV factors and reinvestment. The next stage. See here. Please listen. Cash flows are of 4 types. In our subject totally in FM, whether you take interfinal anything, there will be only 4 types of cash flows. Cash flow type number 1, you can see there, the first type of cash flow is called as single cash flow. Second time is called as annuity cash flow. Third one is called as multiple, okay, I have written that in second. Okay, second, multiple uneven cash flows. And next one is annuity cash flows. And last one will be perpetual cash flows. Let's summarize everything once again. There are 4 kinds of cash flows. Number 1, single cash flow. One by one, let us understand the example. Single cash flow name itself is very clearly saying that it's one-time cash flow that comes. Example, there are LIC policies. If you invest in a LIC premium, you will receive the amount today, in future. How many times you will receive? One time. Those are called as a future cash flow, but there will be only single cash flow. So tell me, what is the first type? Not answering. Number 1. Previous example, whatever we have done, 75,130, that's a single cash flow. Clear everyone? Example sake you can understand. Insurance policies can be a classic example. I invested today. I slept for 25 years. 25 years after I wake up, I will receive some bulk amount in hand. Means how many inflows you are receiving? 1. That is called as what inflow? Single cash flow. That's the first type. If I write year cash flow, year place what I write there? Please see and tell. Year place. I have written what here in the year place? 10. Means 1 to 10 years. 10th year ending. Everyone? If it is 1 to 10, how to write? 1-10 means from 1 to 10th year. Like that you can understand. Clear everyone? 1 to 10 means first ending to 10th ending. That's the meaning. Clear everyone? Now I have written there 1 to 10, 10. Means 1 to 10 years, 10th year ending. How many cash flows? 1. Take the second example. What is the second one? Multiple uneven cash flows. Listen carefully. What is this multiple uneven cash flow? First, you should tell me one point. Multiple means singular, more than one. So therefore, cash flows will not be 1. It will be multiples. 5, 10, 3, 4, like that. Multiple. It will not be 1. More than 1 cash flow, but uneven. Classic example, plant and machinery, land and buildings, etc. Example I will tell you. Plant and machinery is there. Which one? Plant and machinery also leave off. Educational institutions. They will get same number of students and same amount. It will change. May increase, may decrease. But never it will be constant. Tell me. Batch 1, I will get some amount. Batch 2, after 6 months I started. I will get the same amount. Higher or lesser? Maybe higher, maybe lesser sometimes. Clear? Year 1, I got 600 students. Year 2, I got 730 students. Year 3, I got 610 students. Year 4, I got 530 students. Year 5, I got 900 students. If you observe this pattern, number of students are same or different? Answer? So, if you multiply by per student fee, you will get the same revenue or different revenue. Therefore, there is one cash flow, multiple. Even uneven cash flows. Those comes under second category. Like that you need to write in the papers. If a question comes, first in the mind what you need to understand? Which kind of cash flow the question belongs to? Is it a? Everyone respond. Is it a single cash flow or multiple uneven cash flow? Second part. Third one. What is the third one? Classic example. Interest, debentures interest, etc. Tell me. Debenture interest is fixed variable. Fixed variable. 10% on 1000. How much I will get? 10% on 1000. How much I will get? Second year? Third year? 10th year? Multiple or one? Multiple. But even. Those are called as multiple even cash flows. Those are also called as annuity cash flows. Clear or not? Yes, first type. I will not repeat so many times. You should repeat rather. First one. Second one. Third one. Annuity cash flows or multiple even cash flows. Multiple uneven. Multiple uneven. Are you understand the points or not, everyone? Third one. Last one. Perpetual cash flow. That's a big story. We have second chapter called as dividends. At that time we will understand. Okay? That's why I have clearly written there. Discussed in the dividends concept. There is a chapter called as a dividends impact. Second chapter for you. In that chapter we will discuss about that more in detail. In this chapter, cost of capital also we will understand it. I will not tell the logic there. I will tell this is a formula, give the answer. But the logic behind that formula, first concept of dividends chapter called as a Walter's model. First topic that concept will come. Listening? There we will do the answers with regard to perpetual cash flows. Perpetual cash flows means what? Name very clear. One time, multiple times, or infinite times. It is not uneven, it is even. But multiple means there should be some number. 10, 5, 8, 12 like that. Multiple. But that multiple continues till how many years? No one knows. Indefinite number of years it is continuing. How to do the valuation is the challenge there that we are going to understand. Everyone understood the point clearly or not? Yes, tell me how many cash flows will be there? 4. Number 1. Second one. Third one. Fourth one. I will tell you the name of the instrument or an asset. You should tell the nature of cash flows it gave. LIC. No interest bonds. No interest bonds. 10 years bond life. No interest. One time you invest. 1 second. Invest 5,000, take 25,000. That's all. In middle, I will not give you anything. So these are available. These are called as zero coupon bonds. What these are called as zero coupon bond. Coupon means interest. Zero coupon means no interest. Tell me. Zero coupon bond. Zero coupon bond. Invest 100 today, take 1,000 after 5 years. Invest 100 today, every year I will pay you 10, 10, 10, 10, 10, 10 for 10 years and I will also give you 100. Fantastic. Next one. You invest today, I will give every year, but how much I will give, I don't know. Invest in the share of a company. Perpetually you continue. These are the 4 cash flow types. Everyone understood the concept clearly or not? So 4 cash flows. Please copy it on the notes clearly. Don't write the below one because already you completed the test today. Okay. Write down, keep the heading. This is the topic number. What not? You are not putting numbers also. This is a flow, therefore I will write. I am changing the flow and I am making it. First, 1 second. Book. First, why this chapter? Completed writing, that is 1. Next, various types of cash flows and compounding. 2nd, concept of TVM in nutshell. 3rd, next, pictorial representation. That will be 4. Now this will be the 5th one. Now this will become the 5th one. Sir, I didn't understand this numbering also, sir. Go to hell, write whatever you want. This also you need assistance, means I can't do anything. Okay. Now 5th one. 5th, keep the heading. Types of cash flow streams. Types of cash flow streams. Types of cash flow streams. Branch it into 4. Show some urgency in writing. Branch into 4. Everyone had the colored pens, huh? Please don't be confused in that case. Okay. When I say, I will say for a purpose, or else why I will ask you to buy? We are doing any competition, a color competition? No. But why I am asking you to write is after 2 months or after 1.5 months, once the classes are completed. If you open the book, it should be appealing. First, you should feel I should read this. The same theory I follow for FM, law, all these subjects. Why? That color will give you any intimacy that at least this is my subject, I have to read. So please write down clearly. Those many pens also not required. You are selling pens, 10 rupees each pen. Right. And there is no way. I will go from that side. Right. Where is Kishore? Kishore? Hi. Nice meeting you. Blue and black are not colors. Please, bro. For me at least. Completed writing? So we now completed. These are not types of cash flows. These are the types of cash flow streams. The flow of cash flows can happen in 4 ways. One time it can come, multiple times evenly it can come, multiple times uneven it can come. Sometimes it can also become a perpetual cash flow, any type. These are called as a streams of cash flows. Now, listen, up to here, everyone, whatever we discussed, understood? The last set is calculations part. In exam or in the class, we have to do questions or not? How to do? What are the ways of doing it? That we are going to concentrate on. Please see here. I will give you enough time to copy. So please listen carefully. These are all the basics that you need to understand. See here. Okay, see the screen. See the screen. Ways of calculating the PV factors. Question comes in the book, or in exam a question will be asked. How to solve it? You can have 3 methods of doing an answer. PV factor will be given for the exam. You can do it in 3 ways. Way number 1, using a formula you can do. See the formula clearly. See the formula, what it is. 1 by 1 plus r whole power n. 1 by 1 plus r whole power n. Okay. Second one, table. Sometimes in the exam they will give you the table directly. Okay, PV factor table will be there. I will show you how it look like. Study material everyone brought? First book, last financial tables will be there. 1 second, give me. Yes, it is there. Last pages. Last pages. Financial tables. Hello everyone. Have you seen the financial tables? How to see that financial tables I will tell you today. Now we are going to learn that. Before break I will complete all these issues. So please listen carefully. So next 15 minutes or 20 minutes our target is to understand how to do any kind of PV factor in all the 3 ways. Clear? In all the 3 ways how to do. 1, using the formula. Second, using the table. Third one, without using formula, without using tables, using calculator also you can do. How to do that also I will show you. Okay, example we will take and we will see. Please see the screen. Sir, then when calculator I can do, I will go for third model only, sir. Problem is, institute expects you to answer fully. Directly if you put an answer from calculator, it doesn't look good. Therefore, it is always good to learn the formula. But to understand the background of the formula is much more important. Sorry, okay, I will give you one example. You please see there. What is R? Very good. What is N? Number of? Number of years, or I can tell life. Life is the N. R? Again, some people are not in this world. Please come back again. Don't waste my time and your time as well. Listen carefully. What is R? Very good. What is N? Life. Okay. Now listen. Why that formula? Because FV into 1 by 1 plus R whole power n only will give you the present value. If to this 1 by 1 plus R whole power n, if you multiply it with FV, it will give you what? PV, present value will be coming. Are you understanding or not? So FV divided by 1 plus R whole power n equal to? Repetition, FV divided by 1 plus R whole power n equal to? That means to know PV, FV should be applied on this formula only. Yes or no? At least from this you need to understand one thing. Let us see how many of you will at least to some extent recognize the intention behind. Okay? See the formula 1 by 1 plus R whole power n. Observe that properly. Like some hypnotism, you see that. Something he want to tell. No. It want to tell something. PV equal to FV into 1 by 1 plus R whole power n. I am giving hint. Don't ask anything else. I will not answer. I will not answer your questions. You answer to my question. PV equal to FV divided by 1 plus R whole power n, or FV into 1 by 1 plus R whole power n. Anything is same. A by B can also be written as A into 1 by B. FV divided by 1 plus R whole power n can also be written as FV into 1 by 1 plus R whole power n. Are answer here? Yes, financial management will have mathematics or not? Yes, all the rules of maths will come again. That rule you need to understand. A by B can also be written as A into 1 by B. Likewise, FV divided by 1 plus R whole power n can also be written as FV into 1 plus R, 1 by 1 plus R whole power n. That means this is the formula you are applying on that. Clear or not, everyone? What is the meaning? Shall I tell you? I don't want to waste your time. Present value and future value. Listen. Present value and future value calculations, we are doing that. PV equal to FV divided by 1 plus R whole power n. Understood the point? Listen. PV means, what is the full form? Fantastic. Present value of dash. Rocks, salt. Present value of what? Future cash flows. I don't want. I want correct terminology. Value of what? Correct. Value of what? Value of what? This asset value is derived from future cash flows. Okay. Divided by 1 plus R whole power n. You should understand value of an asset and R. Value of an asset and n are inversely proportional. If one increases, one decrease. 1 by 1 plus R whole power n means it is having a multiplication and division. Means it is having a inverse relation and direct relation. 100 by 10, 100 into 10. You can understand the difference, kada? 100 by 10, 100 into 10. 100 by 10 means the number will be less or more? 100 by 10. 100 by 10 less. 100 by 10. 100 into 10. That's all. Multiplication will always increase. Division will always decrease. PV equal to 1 by 1 plus R whole power n into FV. That means whenever R rate is increasing, R 1 by 1 plus R place, if you put 10% you will get one answer. If you put 12% you will get another answer. That answer will be definitely lesser. I will now show you through some calculations on calculator only. First listen carefully. 1 lakh divided by 1.10 power 3. You calculate and tell me the answer. Array, ask the same question again. 1 lakh, see here, 1 lakh divided by 1.10 power 3. 75,000 131. Sorry, okay. Now I made 130. Okay, leave off. Now, what is this? This is the value of the asset today. Okay. Now tell me, 1 lakh divided by 1.12 power 3. 71,000 170. hence proved. That means the value of the asset and R are always direct proportional, inverse proportional. One increases, another decrease. One decreases, another increase. 1 lakh divided by 1.08 power 3. $79,000. What is the meaning behind this? Value increased or decreased? Value of the asset increased or decreased? What is the moral of the story? Asset value and the rate of return are inversely proportional. Rate increases, asset value decrease. Rate decreases, asset value increase. This is the moral of the story. Relation between asset and the rate of returns. Everyone understood that point clearly or not? Very, very important point that one has to observe. Okay, now let us see. So, you can do the answer in 3 ways. One, formula approach. One, formula. Second one, table. Third one, directly calculator you can use. Like what you are doing now. Now you have done the third one. If you see the calci type, first what you type? 1 by 1.10. How many times you pressed is equal to? 3 times. How many of you, frankly tell me, don't know how to do the PV factor calculation on calculator? Anyone? Sir, if you say at least, I can show you how to do. If you don't tell to me, I will presume that you know and I will go into the problems. At the time you will feel bad. Shall I tell how to do that? That's all. Thank you very much. Give the calculator once. Okay, see here. Visible? No problem. See here. Thank you. Sir, see here. See here. Don't fight. Whenever a question is given, please, how to do the calculation? Tell me, PV factor formula is 1 by 1 plus R whole power. Whole power? First, what you need to do? First thing is, if they give, say for example, 15% for 5 years. 15% for 15% for. In the given example, I will invest 75,130. I will invest 75,130 today after 3 years. I will receive amount after. Or I can tell this way. I will receive 1 lakh today after 3 years. What is my required return? What is my required return? 10%. That means how much I have to invest today? 75,130. Yes or no? How you got that? 1 lakh divided by future value divided by 1 plus 0.1 whole power 3. To do that, take the calculator. 1 divided by 1.1. Press equal to 3 times. 1, 2, 3. You got 0.7513. You can see on the screen. Take 3 digits only. Institute will consider only up to 3 digits. Round off to the 3rd digit. If I get 0.7519, how to take? 0.752. Close it. 3rd decimal you need to close. Listening or not, everyone? Everyone tell out how to do. I want 18% for 6 years. Take calculator. 18% for 6 years. Take calculator. 1 divided by everyone. 1 divided by 1.18. How many times equal to? 1, 2, 3, 4, 5, 6. How much is the value? 0.37. 0 for the 0. That's all. 0.370. Everyone got the answer or not? Yes. Anyone want me to repeat? Tell me for 20% now, for 10 years. Sir, your calculation I don't want. I want express clearly because everyone has to understand. Tell me, 1 divided by 2. Very good. 1 divided by 2, if you make weird answers, you will get 1 divided by 1.2. How many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 0.162. Yes or no, everyone? Yes, that's all. This is how you need to do. Everyone understood the point? That's all, sir. This is how you need to do. So valuation should be done that way. With the calculator, whatever we have done now is coming under first category, second or third. First we have done the third one. Easiest method possible. But institute may not give you the marks. Because institute should know. Sir, you have done all these in calculator. How do I know? Maybe you copied from other page. Therefore, you have to show the working clearly. For that, you need to write down formula. 1 by 1 plus r whole power n. You have to write it clearly. Clear or not, everyone? For that, this will be useful. First, tell me, formula everyone understood? Yes, inverse, directa? Inverse relation between whom and whom? Asset value and R increases, asset value fall, decreases. Rate decreases, asset value increases. This is how the relationship will be. Clear? And we proved that through numbers also. Done. After that, second one. Okay? Tables. Please open the financial tables once. There will be 4 types of tables. Please come to, I will tell you the meanings of each and everything. Please see the screen once and you also see your notes. Please read this. Present value of future value. Future value of 1 rupee today. Future value of 1 rupee today. Means it is compounding or discounting. Tell me, is it wrong to repeat answers to you? You will feel irritated when I repeat, but you irritates me by giving wrong answers of what we discussed 10-15 times. Future value will be always indicator of a discounting or compounding. Compounding. Present value is an indicator of discounting. Future value is an indicator of compounding. That's why the compound sum of 1 rupee. We want now 1 by 1 into. Now we want the compounding 1 into. We want 1 by 1 plus r whole power n. Means we want discounting or compounding. Answer. Discounting. So we need to go to the next table and check. What is this? Present value of rupees 1. This is 1 we want. Write down here discounting table. Discounting table. Sorry, I will ask you a question, answer. And this is applicable to everyone. Please properly observe. I will show you first. After that, next 2-3 questions you answer. I want 7%. My R is how much? R is how much? N is 14 years. N is 14 years. See the screen. See the screen. What we need to look? 7. Corresponding I need to look? 14. I need to look what? 14. So go like this. Stop here. What is the number? 0.388. Like that you can see and you can do. This is how the PV factor table has to be looked after. Everyone understood? Yes, shall I ask you a question? Will you answer now? Yes, my R is 14%. N is 7. How much percent I ask you? How many years? Now what you understand how much it is? 0.4. Shall I ask another? My R equal to or my N equal to 18, R equal to 8. Eight for 18. 0.25. 18% for how many years, sir? 8 years. How many years I ask you? 18 years. Okay. 18 years at 8%. So how much the answer is? 0.25. Now answer. Listen. 0.250 is your answer. Yes or no? I will ask you one small question answer. What is the meaning of 0.250 is a question. Okay, I am zooming it. I will ask you questions one by one answer. What is the meaning of 0.250? The meaning is, if you are, this is a present value table of future value. All values are in today's terms or future terms. Fantastic. See the screen. Point is, 0.25 means what? 1 rupee after how many years? 18 years. I will receive 1 rupee today na after 18 years. Answer properly. I will receive 1 rupee today na after 18 years. How much interest I want? At that rate of 8% for 18 years, today that 1 rupee value will be 0.25. Today that 1 rupee value will be point how many times? 0.25. I will ask you one question with common sense, if any. Answer. What is R? In my example, R. For how many years? 1 rupee is how much? Our asset future value is 1 rupee. Today what is my present value of asset? Fantastic. What is the present value? Now R equal to not 8, R equal to 7 for 18%. You need not see upper, just 1 point above. 0.17 year. Listening everyone? Listening? R equal to how much percent I said? 7% for 18 years. You tell me how much it will be. 0.290. 6 are they? Sorry, 0.296. Now tell me, my asset value is 0.25 or 0.296. Asset value increased or decreased? With the decrease of R, increase of R? That's what I want to tell. When R decreases, asset values will increase. This is a proof. Everyone understood the point clearly? This is how PV factor tables can be seen. First everyone, 1 yes, understood or not? Yes, sir. Very good. So, now you need to copy the notes. Once you copy, we go to the next one. Okay. Please copy it on this. No break until you copy this right now. Copy down. Sixth concept. Ways of calculating PV factor. Sixth one. Ways of calculating PV factor. 1 second, I will change this. Okay. Ways of calculating PV factor. Sir, everyone understood how to see the table? Yes, in class, whenever question comes, we will do in all the 3 ways. For the first initial problems, more clarity will come. Write down neatly. Ways of calculating PV factor. So down below there is a small illustration type to make you understand. Also do that. In a table you have to write like this. Everyone completed the three branches? Three branches. In the exams, problem has to be done with the following format. Year, cash flow, PV at the rate of, how much percent it is? 8. Example I have taken. PVCF, also called as a discounted cash flow. PVCF means present value of future cash flows. Write down. Okay. Write down. Write down this. Year cash flow PV at the rate of 8% PVCF. Also called as a DCF, discounted cash flows. 10 means 10 years are 10th year. 10th year end. After 10 years I will receive 50 lakh. After 10 years I will receive 50 lakh at 8% for 10 years. What is the present value? 23 lakh 15,967. Means you can understand this in two ways. From present value point of view, if we invest 23 lakh 15,967 today at 8% per annum return with intermittent reinvestment at same rate, we get a maturity value of rupees 50 lakh. From the future value point of view, the value of rupees 50 lakh after 10 years is not same. Rupees 50 lakh today, it will be very less in today's term. In short, it will be only 23 lakh 15,967. You can understand either from present value point of view or future value point of view. That also you didn't write, copy. Completed? So write down the interpretations also properly. From the present value point of view, if we invest 23 lakh 15,967 today in the present value terms at 8% with intermittent reinvestment at the same rate, we get a maturity value of 50 lakh. From the future value point of view, the value of 50 lakhs after 10 years is not same as rupees 50 lakh today. It will be very less in today's terms. In short, it will be only 23 lakh 15,967. Okay, na? Completed, everyone? So keep the heading. Which question you are writing? Number? How many completed? 6. Okay. 6th lane, this will be A. In 6, present value will become A. Ways of calculating PV factor, na? This is A. Okay. This is, write down clearly somewhere. Present value of single cash flow. Present value of single cash flow. How many cash flows are given in this example? 1. So this is the present value of single cash flow. Next, keep the heading B. Present value of annuity cash flow. Present value of annuity cash flow. Keep the heading and take a break. So let us continue. Okay. So listen. Next concept, present value of annuity cash flow. Write down. Present value of annuity cash flow. Annuity cash flow is a cash flow which comes for 1 year, multiple. But even, uneven. Even. So therefore 1 lakh, 1 lakh and 1 lakh. So please do that. First copy down the question. In question number 6 or 7? 6. It is B. Write down. Present value of annuity cash flows. Present value of annuity cash flows. Present value of annuity cash flows. Just copy down the question. Way 1, way 2, way 3 I will explain. Tables also we will see now. Present value of annuity cash flows. Write down the question. Example year 1, 2 and 3. Cash flow 1 lakh, 1 lakh and 1 lakh. So interest at the rate of 10%. Okay, shall we continue? Okay. Don't copy anything, don't answer anything, please listen first. I will tell you 3 ways of doing this. Way number 1, you can see on the screen the first way as to how to do it. Okay, first, see here now. First one. What is the formula for present value? Future value divided by 1 plus r whole power n. 1 lakh I will receive one time, 3 times. At the same time frame, different time frames. See there and tell me, first 1 lakh will be received at the end of next 1 lakh, next 1 lakh, All can be added. 1 lakh, 1 lakh, 1 lakh. Can we add all the three? Why? All the three don't belong to a single time frame. They all belong to three different time frames. We can't add. It will be like something like yesterday I said dollar, rupee, euro. You can't add. First convert all of them into one common currency and add. Here first 1 lakh will be coming at the end of second 1 lakh, third 1 lakh. All the 1 lakhs belong to the same time period or different? So first point, what we will do is, this we can do in three ways. I am getting same 1 lakh for 3 times in 3 different years. Yes or no? You have 3 methods of doing this. You can do in 3 ways. Way number 1, tabular method like this. Okay? First year, second year, third year. Can I add all the 3? That's what I have written below. One can't add these directly because all these cash flows belong to different time frames. So you can't add them. Clear everyone? Okay. Tell me. What is the formula for present value of future cash flows? Future value divided by 1 plus r whole power n. Take calculator. What is the first year future cash flow? 1 lakh. So formula 1 lakh divided by 1 lakh divided by, first you tell me 1 by 1 plus r whole power 1. How many years after cash flow? N will be answer. So 1 lakh divided by 1.1. You tell. How much I got? See the screen, whether same thing is there or not. So how much I have written? 90,900. 90? Okay. Why I have written like that? Round number will be more appealing. We are not doing any question here. Analysis of a concept, that's all. Don't work for accuracy. Understood the concept or not? Yes, now listen carefully everyone, please. So this is the first thing I want to convey. The first point is, 1 lakh will be received at the end of first year. I want the present value for that. Okay. Next year also I am receiving how much? Answer. But the second 1 lakh is received today, na? After 1 year, after 2 years. We want value at the end of first year, at the end of 0 year. Answer. Second 1 lakh is received today, na? After 2 years. Second year should first become first year. First year should again become 0. I need to bring back, pull back how many times? N should be 1 by 1 plus 0.1 whole square. Understood the point or not? Understood? Do that. Like that I got that 0.826. Did you understand how I have done that or not? Third one. Third one, just answer. 1 lakh is received today, na? After 1 year, after 2 years, after 3 years. We want present value, na? Future value. Third year to bring to present value, how many times I need to pull back? First I pull back, 3 becomes again 1 again. How many times? N is equal to 3 then. 0.751. Clear everyone in the class? So 1 lakh into 0.909 became 90,900. 1 lakh into 0.826 became 82,600. 1 lakh into 0.751 becomes 75,100. Now tell me, 90,900, 82,600, 75,100. Can I add all the 3 or not? Because all belong to a common time frame. What is that common time frame? Present value. That's the meaning of present value factors. Understood the point or not? FM considers cash flows are discounted cash flows are discounted cash flows. Everything you should tell in today's terms because you will take decision today. So I want everything compared in a today's situation. Okay. So it became 2,48,600. So read the notes I have written there. Read the notes I have written there. These cash flows can be added since all cash flows belong to a common time frame. What is a common time frame? Present value. And 3 or 2 or 1 or 0 na? 0. Now tell me, 2,48,600 is the inflows in present value or outflows in present value? I will receive 1 lakh. I will receive another 1 lakh. I will receive another 1 lakh. 248,600 is present value of future cash inflows, future cash outflows. I will get that 1 lakh, 1 lakh, 1 lakh every year if I first put a investment today. Today what I have to do? Invest. Investment is a inflow na outflow na? 1 lakh, 1 lakh, 1 lakh is a? I will get that 1 lakh, 1 lakh, 1 lakh today na? After 1 year, 2 years, 3 years. 2 years and 3 years. Everything we brought into. Now the present value of inflows, you can compare directly with the outflow because both are comparable. That's how decisions are taken. Everyone understood the concept or not? That's the point, sir. Okay. Please copy down this. Way number 1. Write down way 1. So here cash flow PV at the rate of 10% PVCF. That table, keep it in mind, minimum 300-400 times we will write the table because everywhere in SFM that will come. Here cash flow PV at the rate of some percentage PVCF. Completed? Completed everyone? Okay. You can do this in way 2 also. I will do it and I will then give a time for you to copy. Please see here. There is a second way around to do this. Okay, see here. Tell me year 1, year 2, year 3. First year I am receiving how much? 1 lakh. Second year also I am receiving 1 lakh. Third year also I am receiving 1 lakh. We are multiplying this by 0.909 plus this we are multiplying with 0.826 plus this we are multiplying with 0.751. Listening everyone? Yes, these are the three cash flows. See the screen. Now you got 90,900, 82,600, all are approximations only. Next one 75,100. Total how much you got? 2,600. Okay. Now that means 1 lakh into 0.909 plus 1 lakh into 0.826 plus 1 lakh into 0.751. These are the things you have done. Yes or no? In all these, 1 lakh is a common number. Yes or no? Now what I will do is 1 lakh into 0.909 plus 0.826 plus 0.751. So 1 lakh into 2.48. So total how much it is? 2,48,600. This is second way of doing the same. Everyone understood or not? Yes, what is a common? 1 lakh is a common. Therefore, whenever question is given on annuity factor in exam, you need not do like this and waste your time. Directly first you take the cash flow. Take the multiply it with the present value or future value. None of these annuity factor. What it is called as a annuity factor. 0.909 is? 0.909 is present value of 1 year. 0.826 is present value of 2 years. 0.751 is present value of 3 years. 2.486 is present value of 3 years annuity. Clear or not everyone? Clear? First copied on this. That's what I have done here. Nothing great. Write down. Cash flow into PV factor equal to discounted cash flows. Write down. 1 lakh into 0.909 plus 1 lakh into 0.826 plus 1 lakh into 0.751. Once you do 1 lakh into, you can take it as 1 lakh as a common, 0.909 plus 0.826 plus 0.751. It comes to 2.486. So 2.486 into 1 lakh, 2,48,600. That will be called as discounted cash flows. That factor is called as a present value annuity factor. So same you have done also in your CA foundation time value of money. But here are you understanding the formula and its meaning or not? In exam you should not write shortcuts. You have to present the formula, you need to tell the meaning and write down. So 1 lakh into 0.909 plus 1 lakh into 0.826 plus 1 lakh into 0.751. 1 lakh into common 0.909 plus 0.826 plus 0.751, which gives you 2,48,600. Annuity factor of present value is 2.486. Shall we continue? See here now. Observation number 2. Sir, everyone understood the way number 1 and way number 2? Way number 3. See the table. Please open the annuity factor tables. Open the annuity factor tables. Come to appendix 5. Come to appendix 5. Appendix 5. Please don't waste my time and also your time equally, please. Started seeing appendix 5. First I will mark one point. Tell me, this is 1 year factor, annuity factor. In our given example, first 1 lakh will be received. Not listening. First 1 lakh is received. Second 1 lakh. Third 1 lakh. We want future value or present value? This is a future value table. So we should not see this appendix. That's what I want to tell. Okay? Don't see this. Go to the next one. Present value factor, annuity. This is what we see. Now, please, I want you to answer one question. In the given example, 10% example, we receive how many 1 lakhs? What is the annuity number you got? I will write here, you tell me, it is for how many years? At what percentage? So, see here, 10% for 3 years, 2.487. That's how you got the answer. Everyone understood the point clearly? Hello, everyone, I'm talking to you. This is how you can see the table. Now, I will give you one assignment you do. Okay? Better you do one thing. This question you copy. This is the third way you can do. This is the first way. Not recommended in exam. To know, I have written. Second way, never do this in exam. Number 3, always use this. This is the way in which you need to do. Instead of putting it for 3 years, you can directly see. This is present value of three years annuity. Present value of 3 years annuity of rupees 1. 1 rupee, 1 rupee, 1 rupee. I will receive 3 times. Annuitized present value will be 2.486. Listening everyone, completed Once you complete, I have good questions. So you will solve. Don't write any other thing below that. You are writing ways of calculating PV annuity factor. Did I ask you to write? Overaction. Did I ask you to write? See here. So, okay, leave off. Please listen. So, now we completed understanding what is the meaning of annuity factor. Clear? What are the 3 ways we completed now? 3 ways. Way number 1, individual cash flow. Way number 2, taking the common cash flow and adding the PV factors. But the best method will be this one, table approach. 1, 2, 3 means what? How to understand this? First year ending and third year ending. First year ending to third year ending means how many cash flows are there? 3. So for the 3 cash flow, this is a 2.486. Everyone understood the point or not? Clear up to here? There is a third way. Take calculator. How to do the PV factors annuity in the calculator? Everyone please use M plus. You know how to use M plus? Yes, memory recollect. Yes, then done. Take the calculator. Now visible. 1 divided by 1.1. Don't do anything, equal to M plus. 3 years we want. Again equal to M plus. Again equal to M plus. MRC 2.486. That's how it will come. Everyone understood the logic or not? This is how you need to do. Everyone comfortable with doing this? Sorry, I will ask you question answer. I want. Listen. 15% for 8 years. You do the annuity. 15% for 8 years annuity. First tell, bro, you do. Sorry. So how to do it? 1 divided by 1.15 equal to how many times? Then you will get 8th year PV factor. We don't want that. Equal to M plus. How many times you need to click? Answer, yeah. Don't tell me how much answer you got. You completed? You completed? See here. I asked for how much percent? Sorry, we will do one thing. 20% for 10 years. Let's do together. 1 divided by 1.2. 4.192. Have you got the answer? Yes, sir. Anyone who didn't get the answer? I will tell. Sir, 1 second. Some people didn't get the answer. Let us help them. See here. I asked, will you shut your mouth please for good reasons? Please. Listen. 20% I asked for how many years? 10 years. 20% means 0.2. 1 plus 0.2 equal to how much? 1.2. That clarity everyone have? So the clarity also if it is not there. Yatpalam Sri Parameswararpanamastu. Gone. So please, 20% can be written as? 20% can be written as 18, 12.12. Like that I asked for how much? 20. 1 by 1 plus 0.2. 1 plus 0.2 means how much? 1.2. Take calculator. 1 divided by 1.2. Okay, equal to M plus. Equal to M plus. 3rd, 4th, 5th, 6th, 7th, 8th, 9th, 10th. MRC 4.192. 3 times it is enough. 4.192. That's all. That is the answer. Did you understand how to do the annuity, bro? Understood? That answer you will get. Sorry, everyone stop. You tell the answer. I want 24% for 12 years. Stop everyone. If you want, you do, but don't tell the answer. I want every one of you to participate. How many years I said? 12 years kada? 24% for 12 years annuity. Three point 3.851, correct? Hence proved, understood. So, sir, okay, everyone understood the concept clearly? That's the third way. There is another way to do this. Listen. Will you please listen? You stop, after that I will start writing. Over? Happy now? Okay. Now listen. You can do this way. 10% for 3 years I asked 2.486. You can understand this as follows, the formula. Interpretation of this formula, I will tell you in the cost of capital chapter. Anyway, first chapter we are going to do this. 1 by r into 1 minus 1 by r whole power n. Tell me, r is how much? 0.10 into 1 minus 1 by 1 plus r means how much? 1.1 whole power 3. 1 by 0.1, 1 minus 1 by 1.331 into 1 minus 0.751, 1 by 0.1 into 248, 248, 249. Tell me the value now. 0.249 divided by 0.10. That's all. That's the answer you got. This is how you can do. This is a third way. But meaning of this formula and interpretation behind I will not discuss now. Lot of research is required to understand this. This we will see along with the perpetual payments are there. At that concept I will explain the interpretation of this formula. Everyone understood this or not first? Okay, copy down this. These are the 4 ways of doing the PV factor analysis for annuities. Now, with this time value of money concept is completed. Like this you should not think. Listen, reason is I forgot to write big notes below. There is a concept called as a mid annuity. I will tell you what it is. You write down, not yet completed, time value of money, lot of concept is still there. Their notes I will write along with you. Ways of calculating PV annuity factors. Now also problem. Bro, problem for you. Write down, write down. First one is a formula. Second one is a total of PV factors. Third one table. Fourth one is a normal calculator you can use. Zoom. Some people who even don't know the occasion will start giving chorus. Write down. So 1 by 1.10 into 1 minus 1.10 whole cube. Completed. First one completed a formula approach. Yeah. Completed. So we completed annuity factor concept. Completed. Okay. Now please listen. I will give you some questions. Try to answer one by one. Like whatever we understood in the today's class, in a summary way, let us understand. Write down miscellaneous Q&A. Before that, you kept the heading, have you kept the heading? What heading? Write down. Right? Will you please stop? Write down. So miscellaneous Q&A. Number 1. What is the present value of rupees 100 received at the end of, what is the present value of rupees 100 received at the end of 5 years if required rate is 15%, analyze with the help of formula. Try writing the answer. First tell me, 1 second, I am asking you the future value of present cash flow na, present value of future cash flow na. What is the formula? And again, forgot to tell. Single cash flow na, annuity ya, multiple ani vena, perpetual. What is the formula? First write down clearly formula. I clearly said there, write with help of formula. So now the formula whatever you have written, now you are understanding the formula and writing, why to divide, I said yesterday. Why to divide, I said yesterday. So therefore we need to reduce the value. Reduction, instead of doing 3-4 times, we can directly divide by taking power that particular number of years. Do you understand? Formula. Write down the formula first. What is the formula? PV equal to FV divided by 1 plus R whole power n. That equal to, future what is the value? Rupees 100 whole divided by 1 plus, clearly write down, don't assume anything. 1 plus R, how much? 0.15 whole power 5. Rupees 100 divided by 1.15 whole power 5. Rupees 100 divided by, tell me, 1.15 whole power 5. Everyone please don't copy from the notes. One person will tell the answer, remaining will copy that. You do? You also have the calculators with you. 1.15 power 5. 0. 1 1. Tell me the answer. Rupees 7 2. Okay, done. First one, everyone understood how to do this? Next, take question number 2. I don't want to wait for a long time. Please write down along with me. Mr. A invested in. Mr. A invested in. Invested in. Shall we continue? Invested in commercial property invested in commercial property giving the following inflows. Year, how many years? 5 years. Cash flow. Rupees 1 lakh, rupees 90,000, rupees 1 lakh 50,000, rupees 2 lakh, rupees 70,000. Okay? You are required to A. You are required to A. Identify the nature of cash flow stream B. B. Calculate discounted cash flows. Calculate discounted cash flows. I am asking you two questions to do. Okay? Put the heading solution or answer. Tell me first, what is the type of cash flow covered here? Write down. Huh? I didn't understand. Rate I didn't give. Okay, write down somewhere. RR at the rate of 12%. Let's not always use the same 10%. Let's change it. 12%. RR at the rate of 12%. The cash flow stream is called as very good. This is called as multiple uneven cash flows. Multiple uneven cash flows. Completed. B bit. So the cash flow stream is called as multiple uneven cash flow. B bit. Calculate the DCF. Tell me, what are all the columns that we need to open? See here, whatever I am highlighting here, tell me year. So this opportunity is only for me. Year. Okay. PV factor, it is not 10. Just PV factor I need to change. PV at the rate of 12%. Write down the columns clearly. Year, cash flow, PV at the rate of 12%, PVCF. PVCF, other name is DCF. Anything is correct. DCF or PVCF. Next, write down. Year. How many years? 1, 2, 3, 4 and 5. Tell me, what is the cash flow for the first year? Rupees 1 lakh. Second year, 90,000. Rupees 70,000. 12% PV factor. Please tell me what are the PV factors at 12%, one by one. 892, 89, 893. Next point. 7. Next. 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 Multiply 1 lakh into 0.893. So don't waste time, everyone. Rupees 89,300. Second one. Next. 1 lakh. Next. 1 lakh. 27,000. 200. Last one. 690. One second. Now tell me 4 lakh. 4,34,720. 4,34,720. This can be understood as sum of all the discounted cash flows. 4,34,720. Everyone understood the question 2? Next. Question number 3. Mr. A invested in 1,000 bonds of TCS, paying a coupon of 12%, paying a coupon of 12% on par value of rupees 1,000 for 5 years. You are required to identify the nature of cash flow. B, calculate DCF. Calculate DCF. Answer. One by one you tell me, we will write together. First tell me what nature of cash flow does it belong to? It is a multiple cash flow, na? Yes, but even or uneven? That is also called as what? Write down. This is an annuity cash flow, also called as multiple even cash flow. Multiple even cash flow. Shall we proceed further, everyone? B. Write down. Calculation of discounted cash flow. Calculation of discounted cash flow. Calculation of discounted cash flow. Okay. Now tell me calculation of discounted cash flow. One second. Must and should write down the table. Take the table. Same content you copy. Means you need to write. Percentage is how much RR? Not given. Again same, write down somewhere. 12% is coupon here. Don't get excited. Coupon is applied on par value. You will expect something, company is paying 12. 12% is called as a cash flow percentage. You are expecting at the rate of 15%. 12% is for cash flow calculation. You will expect 15, company paying 12. Impact everything, first chapter we will see. Cost of capital. So PV should be always coupon rate or it should be required rate? You require how much percent? 15. But company is paying only how much? 12. That's how you should understand. Okay. Write down there year. Year 1. How much cash flow? No. Like this you need to do. 1,000 rupee bond. How many bonds he is holding? How many bonds? 1,000 bonds. At how much interest rate? How much percent? 12. 1,000. 12%. Interest paid by company is 12%. The cash flow you are getting is 12%. You are expecting how much percent? 15. Meaning of that we can see in the first chapter. Tell me, 1,000 into 1,000, how much? Answer, sir. 1,000 into 1,000. 10 lakh into 12%. 1 lakh. 1,20,000. Here I have done one mistake. What is it? I am trying, someone has to tell, but you are not even telling the mistake. What is the mistake I have written here? It should be 1 to 5. Yes, write down 1 to 5. We are doing which cash flow? Annuity. Annuity, I told you already. 1, 2, 3, 4, 5. Don't write like that, waste of time. Now, everyone tell me, what is my interest rate? Wrong again. Array, where are you here? What is your interest rate? What you are expecting? How much company is paying you? What is the coupon rate? What is the required rate? Both are different. 12 is what you get. 15 is what I am expecting. Clear, everyone? So discounting should be done by my rate. Discounting should be done by company's rate. My rate. Cash flows is your rate. Discounting will be done by my rate of return. Meaning, logic, everything. First chapter we will see. Just calculation only I want at this stage. So now tell me, I want, everyone use calculator. 15% for 5 years annuity factor. Present value of annuity. Everyone, 3.35? 2 multiply. Tell the answer. 4 lakh 2,000 240. 4 lakh 2,000 240. 4 lakh 2,000 240. That's all. This is a calculation of discounted cash flows. Done, everyone? How many cash flows additional problems we have done now? Single you have done. First single you have done. Next one, multiple, even, uneven. Uneven you have done. Next one, annuity you have done. Perpetual don't do now, because first and second chapters only perpetual will come. Anyway, how to explain there. Clear, everyone? Don't do anything at that time. I will give you the fourth question. You do that on your own. I will give you 5 minutes of time. After that, I will give you the answer for that. I will do. Okay? That concept is based on mid-annuity. You try. Everything don't copy from me. You try. Question 4. Write down. Question 4. Okay. See here. Question 4. This is a 5 marks question tested in CA final. This is from a chapter called as bond valuation. What is the name? Bond valuation. Horrible concepts will be there from that basic question I am asking you. 5th question. Let's read together. Sixth one. Messrs. Agfa Industries is planning to issue a debenture series on following terms. Face value 100, term is 7 years. Yearly coupon rates. Yearly coupon means cash flows RR. Coupon means cash flow na required rate. Cash flow. Coupon is what company give. RR is what you expect. Market rate of interest on similar debentures is how much? 15. But company is giving a yield return of how much percent? 16. So tell me, RR is 15 or 16 or 16. Redemption at a premium of how much? 5. Tell me, what is the face value? Answer. How many years life? Means how many coupons I will receive? 7. 1, 2, 3, 4, 5, 6, 7. All the 7 years coupons, this is annuity or it is a multiple uneven? Both. See there. Mid annuities to make our life miserable. Are you seeing there or not, everyone? First 2 years, what is the interest rate? 3, 4, 5, 6, 7. I want the answer. Start doing. Do. Simple problem. Bacha also will do. You ignore. 1 second. Not even ignoring. Why to ignore? See here. What is this premium of? Premium means we need to add a deductor. I want your answer. First, you tell me one point. Just a minute. Question visible to everyone? Question visible to everyone? Even if not visible, I can't do anything. See here. Look at the scenario once. This particular debenture, what is the par value? See and tell me how much interest I will get on first year. Amount. 8 rupees. Second year? 12 rupees. First year? Second year? Third year? Fourth year? Fifth year? Sixth year? Seventh year? Understood the point? So year cash flow you understood now. But don't do like this. You are again dividing and splitting into 7 parts. Don't do that. Do like what they give. Clear or not, everyone? That means you need to take annuity of 1, 2, annuity of 3, 4, annuity of 5, 6, 7. Sir, how, sir? A question will arise or not? Sorry, okay. Next. Last year, how much I receive? Last year, how much I receive interest? Array, see there and tell here, everyone. Last year, how much interest I will get? 15 plus redemption 105. What is a par? Redemption is at par, at premium. Premium of how much? 100 plus 5%. So tell me, what are the cash flows? First, year 1. Year 1. 2. Those two form but a 1 annuity. Next. Those two form part of another annuity. Next. 15. 15. 15. Another annuity. Lastly, again 7th year, 105 will come. How many cash flows? Start from the beginning again. 1 and 2, 8. 3 and 4, 12. 5, 6, 7. 7th year again, 105. Did you understand how to do that? Tell me, year cash flow, PV at the rate of, see the screen again. First see the problem. I will not leave you. Never I will do that. Even when we are doing capital budgeting, at least 5 to 10 problems we will do CA final questions. Okay? At least 5 to 10 problems. I will give you CA final questions. Directly I will open the institute study material for CA final. You do extreme slowly, you do everything. Okay? Inter syllabus, bacha also will do. Okay? Inter syllabus, every bacha will do. Who do final in inter will be the boss. Okay? That person will stand in premium. Inter questions everyone will do. Are you understand? Finally you will do CFA questions. Yes, I know what question next comes. So final so many questions in my book are from CFA. Level will be more and more greater than what the CA questions will come. So therefore don't get excited. See the worst case scenario. Exam you will feel comfortable. See the question. I ask you the question, answer. How many cash flows are there? 8 cash flows will come. 7 coupons, 1 redemption. Common sense number 1 broken. Again, start from the beginning. How many cash flows are there? 8. What? Name the cash flows. First year interest, second year interest, third year interest, fourth year interest, fifth year interest, sixth year interest, seventh year interest, eighth year redemption. That eighth year, not eighth year, sorry, eighth cash flow comes at the end of seventh year. Seventh year, how many cash flows will come? 1 coupon, 1 interest, and another one is redemption. Clear everyone? Now, first 2 years, cash flow PV at the rate of 16%, not 15, PV at the rate of 16% PVCF. 1 and 2, 3 and 4, 3 and 4, 5, 6 and 7 means 5 to 7, 3 cash flows. Lastly, what you should add? 7. What is the 7 one? 100 or 105? 105. Will you try to do at least? Start doing. Wrong or right? Try one. Try in the rough. Don't spoil the notes. That's why I asked you not to copy. Try in a rough. Don't spoil the main notes. Sir, redemption means principal repayment. Sir, when you give a loan, 5 years loan means 5th year end you have to repay the principal or not? First 5 years you got the interest. 5th year you need to pay the principal. When paying the principal of 100, you are paying your year we are getting inflow. First year you got a coupon. Second year, third year, fourth year, fifth year, sixth year, seventh year you got a coupon. Seventh year, what you gave as a principal also should come back. They are giving back at 100, they are giving back at premium. Premium is added or deducted? Added. How much premium? 5%. 100 plus 5%? Or not 5. So 7th year, along with 1 coupon, you will also get the redemption. Principal, whatever you have given. Do. So the meaning of redemption is, so simply, one second, CA foundation, have you heard about a word called as a debenture? Debenture. Debenture is a loan taken by company or equity issued by company? Sorry. Now tell me. Listen. You are investing in debentures. You are investing in debentures of a company. Means you are giving a loan or taking a loan? You use common sense. First point. Company issuing debentures. You took debenture and gave money to company. Now you are giving loan or taking loan? Answer. Here I am giving a loan of 100 rupees. How much? How much? 100 is a principal. Okay, 100 is the principal. You have given principal. On the principal, 7 years they paid interest. 7th year ending they said bye bye. You should not tell bye bye unless and until you also pay me my principal back. I have given you 100 at the beginning. Are you answer or not, everyone? You took a loan from a bank. 1 second, stop writing. You answer me first. You took a loan from a bank. 20 lakhs loan. You paid interest for 10 years. That's all. Bank will leave you. What you should pay? Then principal who will pay? So like that, in case of bank, they will collect principal from the first month onwards using EMI model. But in case of company debentures, EMI model they will not use. Therefore, first what they will pay you? Interest they will pay. Last year they will pay you back your principal. Clear or not, everyone? So tell me, 100 rupees is the principal. They are paying back principal. Principal plus premium. How much premium? Means total how much you will get back? That's all. 105 will come today after 7 years. Now everyone understood the question? Basic time value of money question was asked in exam with a mid annuity adjustment. Try to do. I don't know answer. I didn't remember actually. Where is 105? Okay, this is 7 years. 7th year. Yes, 7th year. What is this?
105 into 16%.
See again. Why you are adding 15 here? Only redemption you will get. 105 only. Your principal you are getting back. What you have done? Don't do like this. I told you already. Do in annuity model. Ammo, wrong. Ammo, hey, why you are getting that much answer? No. Don't see the book. Do with calculator. Wrong. Arey 100. 1 second. Use common sense. 100 coupon. Hey. Hey. 100 face value. 8% interest అంటే 8 rupees కదరా. Why you are written 100? Do again. Biscuit answer. No. Namaste, I will come. Wrong. 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 You didn't even start. Very good. I don't know. I don't think that is the right answer. Wrong. How much? 55. How much? 107, 82. Maybe this is right. Ah. Who has done? 1 second, I will come. Bro. Ammo. Bro. Check the answer once again. Wrong. Wrong. Correct. Wrong. Wrong. Correct. Wrong. 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 Why every two people will get the same answer? How much? Wrong. Wrong. I will tell. I will tell. I will tell. One not? Seventh year ending. Discount for 7 times. 105 divided by 1 plus, what is R? 16. 1 plus 0.16 power 7. This is wrong. How much? Wrong. Wrong. Correct. How much? Wrong, wrong. 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 How much? Wrong. Wrong. Sir, I will do. So listen. Everyone please listen. Now listen. This concept of question is called as mid-annuity questions. Okay? Like this, in CA Inter, they have tested only once. But not this extreme they went. Basics they tested on mid-annuity question. Study material only has this question. One question which is given as an example inside the study material. That too in the first chapter. Cost of capital. When we come to the cost of capital chapter, I will show you similar problem to this in CA Inter. Okay? Now listen, I will also do along with you. But please help me with the numbers. 2-3 persons have done the answer correctly. Very good. But let me do the answer formally to make you understand. First, write down. Did you write the question there? No. Let us write down. Calculate please write down. Calculate in the following case. Calculate present value of cash flows in the following case. Please write down. Year 1 to 2, 3 to 4, 5 to 7 and 7. No need of redemptions, all those things. Plain question you write down. Cash flow. Rupees 8, rupees 12, rupees 15, rupees 105. This is a question which is decoded into numbers. For this, so much circus you are doing, I don't know why. Some people are getting 530, 666. Why you are getting that much numbers, yeah? Sir, I will tell you, some people are multiplying directly with 100. 100 into 8% is the interest, 8 rupees. Directly 100 into annuity factor. Some person got 1172. You should keep him in temple. Worship him for so long period. How can you write like that 1100? You use your brain when you are doing. Write down. So year cash flow. Write down here. Below write down. RR at the rate of 16%. RR 16%. RR 16%. I will first to do. I will give time for you to copy because it requires some working. So please let me first to do. See here. Help me with the numbers. Help me with the numbers, everyone. First, tell me, year 1 and 2, how much is the cash flow? Year 3 and 4, year 5 to 7, year 7. First one, everyone understood up to here, huh? Everyone understood up to here? Very good. Next, 1 second, please. See the screen. How much is the PV factor given? How much, sir? Now tell me. We want 16% for 1 year or 2 years? Answer? How to do? Normal annuity? How to do? Take calculator. 1 divided by 1.16 equal to m plus equal to m plus. That everyone has done correctly. For that I am happy. Tell me, what is the value? 1.605. Next, listen. I want for 3 and 4. How to do 3 and 4? You can do it in 2 ways. Will you stop copying, everyone? I ask not to copy. Listen first. You know the calculation of annuity? Mid-annuity factors calculation. If you don't understand, what if you copy the answers? Listen. First one, everyone understood clearly, yeah? We want annuity for 4 years, first 2. Answer, yeah. Next week, we want for, not for first 2, we want for 3 and 4. How to do? First, do the annuity for 4 years. Reduce from 1.605. How many years you need to do? 4 years you do. From the 4 years answer, remove this 1.605. Balance will be for 3 and 4. 1 second, everyone. Again repeat. We want annuity for which 2 years? Answer. So now tell me, if you want for 3 and 4, how to do? Not answering, start from beginning. We want annuity for 1 and 2, 3 and 4. How to do? First calculate the annuity for 4 years. We don't want 4 years now. Therefore reduce what? 1.605. What is remaining will be 3 and 4. Listening or not? In the calculator you do this. 4 years annuity. I will write roughly 1.193. Answer? No, I don't want answer. I want total first. 4 years, what is? 2.8. We want 4 years, we want 2 years. Which 2 years? This is for 1 to 4. This is 1 to. From this, if I remove 1 to, whatever is remaining will be the 3 and 4. What is the 1 2 number? 1.605. What is the balance? 1.193. Correct? Don't do like this also. That's why don't do overaction. Listen first. This is giving a correct answer but not recommended. Why I will tell you. Capital budgeting, this time the questions came. Listening. At the time they will give 20 years cash flow. You will die reducing 19 times. Tell me, if you do in this model for 5 to 7, what you have to do? First PV factors for 7 you will take. Yes or no, everyone? You have to calculate PV factors for 7 years. From that you should reduce 1.193 minus 1.605. How many times you have to reduce? Not listening, start from beginning again. Tell me. If it is for a 7 years cash flow, so see there, see the screen. 1 to 2, what is the PVAF? What is the annuity factor for 1 and 2? I want for 3 and 4. First we have to calculate for 4 years. Reduce the 1 and 2. What will be the remaining? Will be the balance of our 3 and 4. Then 5 to 7 how to do? Array, use your brain, answer. 5 to 7 how to do? First we have to do for how many years annuity? 7 years. We want for all 7, 5, 6, 7. Means we need to reduce 1, 2, 3, 4. Therefore we need to reduce 1.193 minus 1.605. Then you will get the value. Yes or no? Yes, sorry. I want, this problem doesn't end here. Say for example, I want 8, 9, 10. How to do? First what you have to do? What you have to do? 10 years annuity you have to calculate. Okay, from that how many times you need to reduce? 3 times you need to reduce back. I want for, okay, 8, 9, 10, 11, 12. 12 times, 4 times reduction. Is it practical? Yes, it is not at all practical. Therefore, there should be an alternative for doing this or not. The best way to do this is, I will tell you, you do that, take calculator. 1 divided by, 1 second, no avesam. Listen first, I didn't complete. 1 divided by 1.16. That's all, equal to. Don't do any m plus. You press the equal to or not? First year over. Again equal to. Second year over. 3. Now put m plus. 4. Now plus m plus. MRC. 1.193. This is the best way. Are you understanding or not, everyone? Some people didn't even put hand on calculator, answer also over. They are not understanding what is happening. Do again. Start. 1 divided by 1.16 equal to. Don't put m plus. We want for 1 to 3 and 4. Therefore, m plus only for 3rd year and 4th year. Wrong. Do correctly. 2, okay, 3, m plus 4, m plus MRC. That's all. Answer over. Congratulations. So, everyone understood or not? So, instead of doing that big procedure and reducing, this is the best method through calculators you can do. Everyone understood or not? How many of you didn't understand this calculation? I will tell once again. If you didn't understand. So now tell me, will you do for 5, 6, 7? Do it. Ooh. How to do? First we need to do for 7, after that reducing. Directly equal to. First 4 years, so forget. 5th year m plus, 6th year m plus, 7th year m plus MRC. First tell me this row, everyone understood? Yes, this yes, how to do? Yes sir. How to do? Ade calculator. How to do? 5, 6, 7 I want. What you will do? 1, 2, 3, 4. M plus or no M plus? Very good. M plus first one for 5. M plus second time for 6. M plus third time for 7. Lastly, MRC. Everyone together in the class, tell me, I want for 5, 6, 7. What to do? First 4. M plus or no M plus? Fifth one, M plus. Sixth one, seventh one. Next, you will get the same answer. Clear everyone in the class? That's the way to do the mid-annuity problems. So these are called as mid-annuities. Understood the concept, everyone? Let's do the answer. 16%. Now you tell the answer 1.193. 193. Something you said 1 point. 1.0. Seventh year. I want 7 years. Seventh year. Seventh year. Tell me the value. 0.34. That's why I told very clearly at the beginning itself. 7 does not mean 7 years. 7 means what? 7th year ending. Some people still getting confusion on that. Means they didn't listen properly the introduction. So this is not 7 years. This is what? 7th year. Multiply, give the numbers. First one 12, 12.84. Next, 2 digits only, 14.32. Next, 18.61. 6. Okay, rupees 37 point. Tell me what is the 82 point, 926 means 93. Everyone understood how to do this or not? Everyone? How many of you got this answer first time itself? Please stand. How many of you got? Please stand. How many of you got 82.93 in the first time itself? Very good. Super. Thank you. So, you also got. Thank you very much. So everyone got the answer now. At least now you understood. So what is the answer that we got? 82.93. First listen carefully. This is a model in which we have to do the mid annuity. Okay. Below write down note. This concept is called as mid annuity cash flow. Mid annuity cash flow. Take the corresponding batch of years and press M plus only for that batch. Understood the meaning, everyone? If you want for 10 to 14, only for the 10, 11, 12, 13, 14, 5 years, you need to press the M plus and MRC. Remaining directly you can do. That saves at least 85 to 90% of the time taken for that reduction concept. Clear, everyone? This is a shortcut you can use. In calculator you can do. Okay. So this is the concept of mid annuity. Listening everyone, completed writing? Okay. Next, fifth one. Question number 5. Compare and contrast. Compare and contrast. Rupees 1 received for 3 years and rupees 3 received at the end of third year. Do you understand the question? 1 rupee, 1 rupee, 1 rupee, 3 years I received. What is the difference between receiving 1 rupee, 1 rupee, 1 rupee for 3 years and receiving 3 rupees at the end of third year? That is okay. I'm not asking about that. Valuation comparison we need to do. Did you understand the point or not? Sir, what is the difference between 1 rupee, 1 rupee, 1 rupee received for 3 years and 3 rupee received at the end of third year? 1 rupee, 1 rupee, 1 rupee received for 3 years is single cash lona, multiple anivena, annuity. Answer. 3 rupees received at the end of third year? Answer. Now you should answer me. Required return. Write down that. Required return 10%. Required return 10%. Shall we continue? By seeing them, which will be a higher value? 111 for 3 years, 3 rupees at the end of third year, which will have a more value? So, like this, no one can tell. Okay? You have to do. Start doing. Compare and contrast. So, write down answer. This is a comparison between rupees 1 annuity cash flow of 3 years with rupees 3 single cash flow at the end of third year. At the end of third year. Sir, if anyone is having a Ramzan fasting, you can leave. Nothing great I am going to deal. Because, nothing great I am going to deal. New concept is not there. Old concept in a different way. Others don't move. So this is a comparison between same reason, thank you. Then okay. So this is a comparison between rupee. You also same reason? Really? Allah tera bala karega. So this is a compare. Hey, same reason. Leave. Hey. Leave, run. Shall we continue? Any others? No. Okay, let's go. Kishore. Sir, okay, see there. This is 3 minutes I added now. to the class. 5 minutes, 5 minutes. 10 minutes. This is a comparison between, read, this is a comparison between rupees 1 annuity cash flow for 3 years and rupees 3 single cash flow at the end of third year. Clear? And now, comparison completed. We are comparing these two. Contrast means you should show the reasoning and the differences between both of them. Shall we do?
Yes, sir.
Let's do that. A. PVAF of rupees 1, 3 years. You should tell me the answer. Write down. Here, cash flow, PV at the rate of 10%, PVCF. Everyone do it clearly here. 1, 2, 3. How much cash flow? Rupees 1. 487. 48. Already you have seen this in the table also. Some people are very busy in copying the answers. Namaste to everyone. Put your heads down. Answer. Don't see the answers here. Why you are copying from the board here when you have a capability to do? Completed, huh? How much you got? 2.487. Next, B. Present value factor of rupees 3. This is not 3 years, this is third year. Now, how to do this? Nothing you need to do. Directly formula PV equal to single cash flow formula FV divided by 1 plus R whole power n. Okay. FV, how much? 3 divided by 1.10 whole power 3. So rupees 3 divided by 1.331. Correct? We have done already. Tell rupees 2.254. Okay, 254. Now, what is the difference? Difference means don't do subtraction until. Not that difference. There also 3 rupee, here also 3 rupee. But answer is not same. Any reasoning? That everyone know. I want wise answer. So first point, doing the answer is the work of a graduate. Analyzing the reason is the work of professional. Okay? Seriously, that is the work of a professional. Professional will not tell the answers. They will give the analysis for that. Why it happened? Then I will rectify if you tell why. You are telling it is high, it is low. Normal graduate also will tell that. But how and why this happened is a question. Answer is in the 1 second. First is a annuity cash flow or not? And I can write like this: 1, 1 and 1. First year, second year, third year, rupees 1, rupees 1, rupees 1. Tell me, first year how much I received? I am not asking second case of 3 rupees. Okay, first year how much I received? Answer? Second year? Second year. Third year? First year 1 rupee can be reinvested for 2 years. Second year 1 rupee can be reinvested for 1 year. Third year 1 rupee directly I will take. In the second case, reinvestment concept is not there. That's why it is lower. Are you understanding the point clearly or not? That means what gave the more value? Reinvestment has given more value. Did you understand the point or not?
Yes,
Write down the reasoning. present value of rupees 1 annuity cash flow is having more value because rupees 1 at the first year is reinvested for 2 years at 10%. At 10%. Rupees 1 at the end of second year is reinvested for 1 year at the rate of 10%. At the rate of 10%. Rupees 1 at the end of third year is taken as it is. Is taken as it is. Is taken as it is. Now listen. Rupees 3 in the second case is reinvested or not reinvested? Continue writing. On the other hand, rupees 3 received at the end of third year is not possible of reinvesting elsewhere. Therefore, present value annuity cash flow is having more value. Is having more value. Did you understand the analysis or not? Not yet completed. Continue. This can be understood as follows. Last point, 3 minutes. Please write and leave. We'll complete time value of money by today. Okay. This can be understood as follows. Write down. Here, cash flow, balance years, reinvestment, maturity value. Maturity value. You should tell the answer and write down. I am expecting answers from you. Don't copy. Tell me, when it is first, which kind of cash flow we need to take? Which one? Annuity. Tell me, annuity, 1 second. Second type of cash flow, I am receiving cash flow today na after 3 years. Answer? So, 1 second, I'll make it full screen. See here, I am receiving 3 rupees at the end of first era, second era, third era. Now see the magic. See there. Annuity cash flow. Year 1, year 2, year 3. First keep the years. Listening. Tell me, cash flow at the end of first year, 1 rupee. Second year, 1 rupee. Third year, 1 rupee. Tell me, first year 1 rupee will be idle or reinvested? For 3 years, Next? Next? So reinvestment, how it will be? Rupees 1 into 1.10 whole square. Next, rupees 1 into 1.10 power 1. Are you understanding and writing or not? Yes, next, third one, rupees 1 into 1.10 power 0. That is okay. Tell the first value. 1.221. Next. 1.1. Next. 1. You should tell me now. How much is the value? 3.31. Now tell me. Everyone answer my question clearly. At the end of third year, I am receiving how much? Not answering. Tell me, at the end of third year, I am receiving how much? In the second option, how much I am receiving? Therefore, receiving 111 for 3 years is better than receiving 3 at the end of third year. Because that becomes 3.31 at the end of 3 years, that is only 3. 3 versus 3.31, which is better? That's why first option became better for you. Are you understanding the concept clearly or not, everyone? That's the way in which they have analyzed it. Everyone understood the concept or not? With this, we have completed time value of money and its intricate concepts inside. Everyone understood the concept clearly or not? This is introduction to the financial management. Okay? Next class onwards, we are going to start with our first chapter called as cost of capital. First one, tell me everyone. Everyone please respond properly. First 2 classes, 7 hours we have taken to complete the time value of money chapter. Are you all comfortable with the chapter or not? Yes, sir. Pakka, full clear? Yes, sir. Understood this or not? Yes, sir. What is a crucial thing in financial management? The reinvestments. Clear everyone? So that's how we need to compare and contrast 2 issues. So this is a classic example. Hope everyone understood the concept clearly. Yeah? Yes, sir. Thank you very much. We'll meet again in the next class. Bye.